walking.
So we kindly ask that you make your way to your seats, please. Thank you.
Welcome to the Hyatt Regency Trinidad. Your safety and well-being during your time with us is our first main priority. Therefore, it is essential and necessary that you are familiar with our emergency evacuation procedures. Should it become necessary to evacuate the hotel, a continuous siren will sound, followed by an audible instruction to evacuate the building. When you hear, "May I have your attention please," over the public announcement system, you should proceed to the exit closest to you and make your way to the muster point, proceeding east along the waterfront towards the western end of the Fendu Chalet, better known as the Breakfast Shed. In the event of an earthquake, do not run out of the building. Stay calm, drop, cover, and hold on. If evacuation is required, please listen for instructions via the hotel's PA system for the earthquake evacuation route and muster point. Associates from Hyatt will assist you with evacuating. Once outside, conduct a head count for your group to ensure that everyone is accounted for. Should you believe someone is missing, notify the Hyatt associate in your area. Do not return to the building for any reason until the fire service has stated it is safe to do so. Thank you, be safe, and have an enjoyable time with us.
Great, thank you for the courtesy of your attention during the safety briefing. And we'll be starting in just a short while, moments away from the arrival of our dignitaries. And once they're seated, the formal program will start. And from that, I'll lead you through the rest of the agenda for the day. It's going to be quite enjoyable, quite productive, quite engaging, and most importantly, quite a celebration for the Trinidad and Tobago Stock Exchange. So we'll be starting in just a short while. Thank you very much. Imber. And as the head table is made their way and they're all accommodated, we'll get underway with the formal program for this morning. If you've just made your way into the room, just ensure that your mobile phones are on the silent mode. And will you please stand for the national anthem of the Republic of Trinidad and Tobago, performed this morning by Samantha Elliott. Thank you, Samantha. Very nice. I ask that you remain standing as we introduce for the invocation this morning Rhonda Cillier, Head of Shared Services at the Trinidad and Tobago Stock Exchange Limited, for the invocation.
Heavenly Father, as we commence our 40th anniversary conference, we dedicate this time to you and thank you for granting us the strength to persevere and be steadfast in the face of a worldwide crisis over the last few years. May we continue to uphold the tenets of this conference in striving to enhance our region's economic potential and in so doing its stability. We pray blessings upon our many partners who have given up of their time to make not only this conference, but also our industry the vibrant one it is today. May we always epitomize the attributes of fair business practices and be stellar examples to not only the businesses and individuals we serve, but to the wider community as a whole. Heavenly Father, allow our organizations to continue to be pillars of Caribbean and international collaboration and unity, emphasizing our similarities over our differences. May we continue to show humility in our appreciation of differing points of views, that as we begin this conference, we may make new connections and gain the wisdom to do the work you have set before us. We give you honor and glory. Amen.
Thank you very much. We invite you to sit. The Honorable Colm Imber, Minister of Finance, Member of Parliament, members of the Regional Stock Exchange, Dr. Marlene Street Forrest, MD of the Jamaica Stock Exchange, Marlon Yard, MD the Barbados Stock Exchange, Trevor Blake, MD Eastern Caribbean Securities Exchange, George Edwards, General Manager of the Guyana Association of Securities Companies and Intermediaries, Mr. Ian Narine, Chairman of the Board of Directors of the Trinidad and Tobago Stock Exchange, and other distinguished members of the board, the Chief Executive Officer of the Trinidad and Tobago Stock Exchange, Ms. Eva Mitchell, and staff of the Trinidad and Tobago Stock Exchange, our very dedicated sponsors, specially invited guests. Good morning and welcome to the Hyatt Regency Trinidad and to the Trinidad and Tobago Stock Exchange Conference 2022, leveraging the capital markets to enhance the economic potential of the Caribbean. It's my distinct pleasure this morning to be able to lead you through the proceedings, and so without any further ado, I invite to deliver this morning's welcome address the Chief Executive Officer of the Trinidad and Tobago Stock Exchange Limited. Will you please welcome to address you, Ms. Eva Mitchell.
Morning, everyone. The Honorable Com Imbert, Minister of Finance, members of the regional stock exchanges, Dr. Marlene Street Forrest, Managing Director, Jamaica Stock Exchange, Marlene Yard, Managing Director, Barbados Stock Exchange, Trevor Blake, Managing Director, Eastern Caribbean Securities Exchange, George Edwards, General Manager, Guyana Association of Securities Companies and Intermediaries, Mr. Ian Narain, Chairman of the Board of Directors of the Trinidad and Tobago Stock Exchange, and other distinguished members of the board, staff of the Trinidad and Tobago Stock Exchange, sponsors, specially invited guests, members of the media, ladies and gentlemen, good morning. Ladies and gentlemen, the Trinidad and Tobago Stock Exchange has come a long way since its inception in October 1981, and I'm so delighted to be here for what is a really exciting day for our institution and for our market. Let me share with you that we are passionate about this conference. We have put a lot of thought into shaping this conference so that it is one that forces key discussions that will get us closer to developing a more sophisticated capital market and region and better position us to leverage the opportunities within it. This one-day conference brings together almost 20 dynamic speakers and hundreds of participants, including representatives of the government, issuers, listed companies, investors, private equity professionals, credit institutions, advisors, regulators, and other public authorities. This conference comes at a time where the world is navigating through the post-pandemic challenges and also facing the adverse impact of the Russia-Ukraine war, which has forced, as you know, major supply disruptions, food shortages, and a lot more that we could mention. We are also dealing with climate change, and the repercussions of all this leads to greater shocks within our capital market that we must prepare ourselves for. These challenges also come at the same time when we transition into a more digital market. It is therefore our hope that this conference would facilitate those meaningful discussions that will not only further thrust our mandate into reality, but highlight the dynamism of our regional markets and make the market a tool and benchmark for navigating these challenges. These discussions will strengthen the network across the region and encourage better investing to also support the climate and digital transitions within the region and the wider world. As we start today's session, I would like to express my sincere gratitude to all our participants, our sponsors, presenters, and moderators who have made significant contributions toward this conference. Again, my congratulations to the Trinidad and Tobago Stock Exchange once more for its 40th anniversary, and I look forward to us working together in the coming years to build a solid future for the regional capital markets. Thank you, and we look forward to your active engagement this morning. Thank you.
Our thanks to you, Ms. Eva Mitchell, Trinidad and Tobago Stock Exchange Chief Executive Officer. Ladies and gentlemen, we acknowledge the presence this morning of the High Commissioner for Jamaica to Trinidad and Tobago. We acknowledge His Excellency Arthur Williams. Good morning and welcome, sir. As we continue with the formal program for this morning, we move to the chairman's remarks. And over the past 10 years, Mr. Ian Narain has served on the board of the Trinidad and Tobago Stock Exchange. Mr. Narain has also served as a director of First Citizens, the Telecommunications Services of Trinidad and Tobago Limited, TSTT, and the Investment Committee of the National Insurance Board. To deliver the chairman's remarks this morning, will you please welcome to address you Mr. Ian Narain, chairman of the Trinidad and Tobago Stock Exchange Limited.
the Honorable Colin Imbert, MP, Minister of Finance, members of the Regional Stock Exchange, Dr. Marlene Street Forrest from the Jamaica Stock Exchange, Mr. Marlon Yard from the Barbados Stock Exchange, Trevor Blake, Eastern Caribbean Securities Exchange, and George Edwards from the Guyana Association of Securities Companies and Intermediaries, Ms. Eva Mitchell, Chief Executive Officer of the Trinidad and Tobago Stock Exchange, and staff of the Trinidad and Tobago Stock Exchange. Good morning, all. On behalf of the Board of Directors of the Trinidad and Tobago Stock Exchange, it is my pleasure to welcome you all to our 40th anniversary conference. This is an important milestone in the history of the Trinidad and Tobago Stock Exchange, and I hope that it serves as a catalyst for an even more enterprising future for the exchange. We are celebrating 40 years, but in terms of conferences of this nature, this is a first for us. If therefore you encounter something that is not entirely to your liking, I ask that you bear with us. From my vantage point, this conference fills a gap in the local capital markets calendar, and so I offer that we use this experience as a springboard to have an annual capital markets and investor conference in Trinidad and Tobago going forward. My welcome address will take you through the day's agenda and give you some insights into the thinking behind what is being presented to you today and why it is important. Right up front, it gives me great pleasure to welcome and thank the Honorable Minister of Finance, Mr. Colin Imbert, who will address us very soon. We are extremely grateful for the consideration and support of the government of Trinidad and Tobago as a whole, especially in the context of the tax incentives package offered to SMEs for listing on the Trinidad and Tobago Stock Exchange, the details of which you will be familiar with from the budget speech of the Minister of Finance. We also wish to acknowledge the support and greetings via video from the Prime Minister of Jamaica, the Honorable Andrew Holness. Another warm welcome to our colleagues from the stock exchanges in the region, Jamaica, Barbados, Eastern Caribbean, and Guyana, who are here to celebrate with us. We welcome our many varied panelists and all our distinguished guests. I look forward to engaging discussions during the course of the day as we interact with each other. The theme of this 40th anniversary conference is leveraging the capital markets to enhance the economic potential of the Caribbean. The word leverage in this context means to try to get more out of something. Simply put, we want to present a platform where we can get more out of the capital markets of Trinidad and Tobago and the capital markets of the region so that we can enhance our economic potential as Caribbean people. A stock market is instrumental and integral to economic development and financial growth. Intuitively, we all know this. The next step is for us to really experience this as our reality. Our agenda is structured in order to help to turn this intuition into reality. Very soon, we will have the launch of the Caribbean Index. I will leave our CEO, Ms. Eva Mitchell, to go into the details of that when the time comes. But what I want to say is that with the launch of the index, we now have a tangible Caribbean-wide benchmark to engage with. My hope is that this furthers the collaboration between all the regional exchanges and, just as importantly, between all the regional investors. Because there is now something that ties all our performance and activities together. I am a firm believer, for it to be sustainable, our regional integration should be market-driven rather than by virtue of regulation or politics. We now have an opportunity before us. Let us grasp it. The key activities of a stock exchange are raising capital and providing data to investors from which they can make decisions. That's how we kick off the technical part of the agenda with Mr. Warner and Mr. Agarwal. The latter also serves to lead into the launch of the Caribbean Index. A key responsibility of our stock exchange is to bring depth and liquidity to the market. New listings are by itself not enough. We need to develop and enhance secondary market activity. A deeper secondary market allows for investors to more easily position themselves and for listed companies to experience better price discovery and transparency. This is important if we are to develop and maintain investor confidence. One initiative along these lines is the concept of market making. We have already started discussions with the brokerage community to gauge their interest in participating in such a venture. And immediately after this conference, we will be engaging with our listed companies. The presentation on market making allows us the opportunity to raise the profile of this topic and to give all our stakeholders an opportunity to better understand what it is about and what we are seeking to achieve. The board of the Trinidad and Tobago Stock Exchange fully appreciates that we have to mobilize for the present, but also pay close attention to the trends that are likely to shape our future. Last week, in my Thursday Business Guardian column, I suggested that everyone needs to be an investor. The growing trend towards tokenization and the growing importance of digital assets in the years to come will make this more apparent. Investing will become an activity that will form part of our daily life, as opposed to something we only do in front of a trading screen related to stocks and securities. Today, our first panel, which is on the topic of digital assets, will set the stage, highlighting the trends and the opportunities. I do look forward to a lively discussion. We will be treated to lunch, which is traditionally the best part of any conference. But we all look forward to the presentation from PwC as well. The topic on offer is very important to all listed companies and indeed all investors, so we should pay close attention. And no conference would be complete without an extra-regional perspective to give us some insights and observations on the things that we may be missing from a local vantage point. And that's what we have to look forward to from Morgan Stanley this afternoon. And this serves as a delightful kickoff to our afternoon session. And then we move from an extra-regional perspective to something that everyone in this room should be looking forward to. I recently received an invitation for the 18th annual conference of the Jamaica Stock Exchange. And when I did the math, I realized that I would have presented at either their first and second conference or their second and third in the capacity of a stockbroker from Trinidad and Tobago. If I recall, my topic then, 17 or 18 years ago, was on regional integration. During my time as a stockbroker, I was part of a weekly radio program in Jamaica speaking about the Trinidad and Tobago market. I have done investor presentations in Barbados. It was a few months ago I was on a panel that resulted in a very engaging conversation on working together to develop our SME market space with Mr. Marlon Yard, CEO of the Barbados Stock Exchange. The point is that it is up to each of us to support each other as we work towards producing a bigger pie for our region. This is something I have always been keen on, and I am happy to say that I chair a board that also shares this perspective. I'm therefore very encouraged that the CEOs of the regional stock exchanges in the English-speaking CARICOM are present on the same platform here this afternoon. I look forward to an engaging discussion about the regional markets and especially how we can realize our full potential as Caribbean people. Our final panel takes the theme of the conference and brings it to the specific conversation around SMEs, that's small and medium enterprises. You see the headline that SMEs are the engine of growth for the economy. Well, that engine needs fuel, and in business, fuel is in the form of capital. Having the right type of fuel for the right engine is important. There are lots of SME cars in Trinidad and Tobago that have not given due consideration to the type of fuel they should have for the engine that they are hoping to run. I look forward to the insights from this panel, and I would ask the national business community to pay careful attention to what is being discussed here. All in all, I welcome you to an overall grand and enlightening day of information and discussion. This agenda serves as a platform for the work of the Trinidad and Tobago Stock Exchange over the next 12 months and beyond. It is in part our way of sensitizing and engaging with our stakeholders as we embark on the first year of another 40 years. I specifically want to thank our sponsors for making this event possible, because there is no more fitting context in which to celebrate our 40th anniversary than the one that we have here today. This is a starting point for hopefully many more to come, characterized by optimism for our future, a present commitment to integrity, and an overall drive to move this region forward. The brightest future is ours for the taking, but we must be reminded that every time the bell rings, every time we close another trading day with market highs, there are levels that we still have to aspire to. We also have to learn to appreciate the down days for what they are, a chance to climb again tomorrow. We all have a role to play, whether it is in government, private sector, or civil society. We all must do our part to take our nation forward. We are grateful for our participants, sponsors, presenters, and moderators, who I am confident will make a great contribution over the course of today. Once again, my most sincere congratulations to the institution that is the Trinidad and Tobago Stock Exchange on its 40th anniversary. Welcome. I wish you all an enjoyable and fruitful conference. Thank you.
And our thanks to you, Mr. Ian Narayan, Chairman of the Trinidad and Tobago Stock Exchange Limited, for your kind remarks this morning, as well as setting the stage and context for the agenda on today's program. We're delighted this morning to have remarks from the Prime Minister of Jamaica, the Most Honorable Andrew Michael Holness. Prime Minister Holness was first elected as a Member of Parliament to represent the constituency of West Central St. Andrew in 1997 at the age of 25. He is Jamaica's 9th Prime Minister. Prior to assuming the awesome responsibility of leading the nation, Prime Minister Holness worked steadily at various levels of the potential and political and governance systems. He focused on several key portfolios, areas including social welfare, community development, housing, and education. In his tenure as Prime Minister, he has pledged to build real partnerships with the private sector, civil society, the diaspora, the opposition, and international partners in order to achieve the vision of shared prosperity for all Jamaicans through inclusive economic growth and meaningful job creation. Prime Minister Holness has provided his presentation and remarks via video, and so we present to you to address you via video the Prime Minister of Jamaica, the Most Honorable Andrew Holness.
To congratulate the Trinidad and Tobago Stock Exchange on its 40th anniversary and on organizing this conference under the very apt theme, leveraging the capital market to enhance the economic potential of the Caribbean. Now, economists have long established a strong link between the rate of capital accumulation in an economy and the pace of its economic development. Sir Arthur Lewis, for example, argued that the central problem in the economic theory of development is to understand the process by which an economy, which was previously saving and investing 4 or 5% of its national income, can convert itself into one where savings and investments account for 12 to 15% of national income or more. Rapid capital accumulation and its efficient deployment, including a developed ecosystem where skilled labor and capital meet, are key ingredients necessary to unlock and leverage regional capital markets. Stock exchanges like the Trinidad and Tobago Stock Exchange or the Jamaica Stock Exchange play several key roles. First, stock exchanges provide necessary patient capital that companies need to unlock value, usually by creating the space to finance projects. Spreading the risks amongst investors and matching long-term risks with long-term rewards generally leads to a lower cost of equity capital and the stimulation of economic growth. Second, a sound regulatory framework builds confidence and accelerates capital market investments. The brokers, investors, and companies are closely monitored and regulated to ensure that their behavior is aligned with an orderly, efficient, ethical, and transparent capital market. Third, by attracting foreign portfolio capital, the expansion of stock markets can serve to enhance the supply of investable resources. Now, finally, by allocating capital to promising new products and ventures and away from failing ventures, stock markets are one of the key drivers of innovation and creative destruction in an economy. While these benefits of stock markets are well recognized and understood, there is another important benefit that is often overlooked. Stock markets can be an important means of enhancing redistributive equity in a country, particularly in a global economy where returns on capital tend to far outpace the returns to labor. Ownership in listed companies gives citizens a direct equity stake in the gains from economic growth. This is why the government of Jamaica made a deliberate policy choice to leverage the stock market to widen the ownership base of the economy and encourage direct equity participation in the stock market by average Jamaicans. This is how we socialize wealth towards our goal of achieving economic independence. We have undertaken a number of large privatizations of public assets through IPOs on the Jamaica Stock Exchange. The Wigton Wind Farm IPO in 2019 raised approximately $41 million, attracting over 31,000 applicants, almost 12,000 of whom were new investors. These new investors invested an average of approximately $1,000 each. Half of the investors were under age 40 and half were women. Then in 2020, the Trans-Jamaican Highway IPO surpassed Wigton and became the largest ever IPO on the Jamaica Stock Exchange, raising $100 million. Over 36,000 applications were received, with an additional 12,000 first-time investors. For both these IPOs, the allocation method was bottom-up, not proportionate or first-come, first-served. The bottom-up allocation favored smaller investors in order to achieve a greater level of social equity and diversity in the pool of investors. Even while we seek to emphasize an ownership economy and wealth creation through the capital markets, we're fully cognizant of the risks associated with capital markets, particularly for small open economies. Many emerging markets have seen firsthand how changes in the local and global macroeconomic conditions can trigger sharp and sudden reversals in foreign capital flows that, if not well managed, can precipitate financial crises. In Jamaica, we have taken the view that these challenges do not outweigh the benefits of capital markets. Rather, we have sought to mitigate these challenges through sound fiscal and monetary policies, as well as good regulatory and supervision policies. Nevertheless, we always caution investors in the stock market to do their due diligence, seek professional advice, and only invest amounts that are consistent with their risk appetite. Unfortunately, most emerging markets and developing economies, including the Caribbean, enjoy only a small portion of the benefits offered by capital markets. According to the IFC, excluding China, only about 11% of global equity and debt issuances were placed by companies located in emerging markets in 2019. It is therefore essential for policymakers and other key capital market stakeholders, which means everyone in the room, to clearly understand the conditions in which well-functioning domestic capital markets flourish and to advocate for them. The potential contribution of capital markets to economic growth in emerging and developing economies is even more relevant today than in the past, given the huge financing gaps to meet sustainable development goals in key strategic sectors such as infrastructure, housing, SME financing, and climate action. Traditional funding sources will be insufficient to close these gaps. Mobilization of private sector funding will be key, and capital markets represent the best channel to attract these private investments. The Jamaica Stock Exchange was the top performing exchange in the world in 2015 and 2018 and continued to see vibrant growth and activity even during the COVID-19 pandemic. It has come a long way from its founding in 1968. Some notable highlights are a fully automated trading system was implemented in 2000. In 2008, the JSE fully demutualized and became the only demutualized exchange in the Caribbean. In 2009, the JSE's junior market was established to facilitate investment in approved SMEs. To catalyze the growth of this sector and encourage listings, the government provided attractive income tax benefits available only to listed SMEs. The junior market has been a phenomenal success and now has 46 entities listed with a market capitalization of US $1.3 billion. In 2011, the US dollar denominated securities market was established. In 2013, the income tax rate on dividends was reduced to 15% for resident shareholders. In 2015, the online trading platform was launched. In 2019, the Jamaica Social Stock Exchange was launched. Also in 2019, an agreement for cross-listing was signed with the Canadian Securities Exchange. In 2021, the JSE launched the Caribbean Green Bond Project in collaboration with the Green Climate Fund to explore the debt market as a source of financing for climate resilience and low carbon development. The combined market capitalization of the Jamaica Stock Exchange now stands at approximately US $13 billion, which puts our market capitalization to GDP ratio at approximately 80%. This compares favorably with many developing countries and even some developed countries. Now, what are the factors that have driven this growth? There are 5 critical factors. Macroeconomic stability. This is essential for investors to have the confidence to invest long term. Low and stable inflation rates, economic growth, good fiscal governance, and strong net international reserves are all key components of Jamaica's macro-fiscal framework that engender investor confidence. A strong financial sector. Jamaica has a sound and competitive banking system, as well as a sufficiently large domestic institutional investor base to support the development of the capital market. Jamaica has a robust legal, institutional, and regulatory environment to enforce investors' rights as creditors and shareholders. A strong and innovative management team at the Jamaica Stock Exchange. And finally, a collaborative approach between the public and private sectors for growth. In other words, this success has been as a result of a strong and innovative private sector supported by good government policy, a true public-private partnership. Through integration of our capital markets, let us reignite and provide impetus to the larger regional integration project and realizing the tremendous promise of the Caribbean single market and economy. Let us leverage the regional capital markets to drive the emergence of more globally competitive Caribbean economic and financial enterprises, more rational and efficient use of the region's resources, and stronger regional economic growth and development. Let us develop a robust regional economy that is well positioned in the evolving global economy and able to provide a better life for all Caribbean people. I thank you and wish you all a very successful conference.
Fitting indeed, remarks from the Prime Minister of Jamaica, the Most Honorable Andrew Holness, and our thanks to Prime Minister's office for assisting in ensuring Prime Minister's remarks were provided for today's program. Indeed, apt and well related to the theme of the 40th anniversary conference for Trinidad and Tobago Stock Exchange. We present now remarks and a short presentation on the theme of unleashing the economic potential of the Caribbean by the CARICOM Private Sector Organization, Chairman of Massey Holdings Limited, President and Group CEO, Mr. Gervais Warner. Mr. Warner is the President and Group CEO of Massey Holdings Limited. He has served as an Executive Director of the Massey Group for 16 years. From 2004 to 2009, he held the position of Executive Chairman of the Energy and Industrial Gases Business Unit and has been President and Group CEO for the past 11 years. Mr. Warner is currently serving as the Chairman of the CARICOM Private Sector Organization, associate institution to the Caribbean community, to support CARICOM heads of government to fully implement the CARICOM single market and economy. Mr. Warner also serves on the boards of directors for Citicorp Merchant Bank, Trinidad and Tobago Limited, the Arthur Lockjack Graduate School of Business, and United Way, Trinidad and Tobago. On the theme, Unleashing the Economic Potential of the Caribbean, a dynamic presenter in his own right, please welcome Mr. Gervais Warner.
Good morning, Honorable Minister of Finance, heads of the regional stock exchanges, distinguished ladies and gentlemen, good morning, all other protocols observed. I'm excited because, well, I'm usually excited, but I'm particularly excited this morning because this is an opportunity for us to orient ourselves to what really generates economic or unleashes an economic potential. And though we're here talking about capital markets, I want to actually talk a little bit about why capital markets, and that's to fuel the dreams of people. So if you bear with me, because what I want to do is, in February 2023, the Massey Group of Companies will be 100 years old. Older than all of our countries from independence. And over the course of those 100 years, we've actually learned a few things. And why I want to talk about this is because I want, when I start to talk about what we need to do to unleash the potential in people, I want that to ring through as true to you. The Massey Group was founded by, well, it was used to be Neil and Massey. You all know that. Changed the name in 2014. Harry, Neil, and Charles Massey. And the reason I wanted to start this off with them, because at the very beginning, this group of companies was created by two people who had deep values associated with contribution to society, how people should be treated, customer service, and that has remained in our group through the years that we've traveled. However, we've done a lot over that century to kind of build on that. We've had some ups and downs. We've had various people lead our group. And most recently, we started a form of transformation that I want to share, because it is this transformation that we are finding is unlocking the potential of people. And unlocking the potential of people is what we have found is the absolute secret to unlocking growth and development. So back in, I think it was 2013 or something, we began a journey to be a conscious company. We took on this principle called conscious capitalism. I don't mind talking about it today because 10 or so years on, I find it works. But back then, we were a little uncertain about it. So the idea and principle behind conscious capitalism is to take, and we're here talking about capital markets, but to put some conscience on capital. To run enterprise consciously. And by that I mean to do good. So that you're not just a mercenistic business trying to make money. You know, there was one point in time the purpose of business was to generate maximum return to shareholders. Well, that has been debunked. And of course, it just makes sense because that's going to top out somewhere that's just going to be unsustainable, right? And so in this journey for us to become a more conscious company, and by that I mean for us to, you know, be a responsible contributor to our society, for our employees to enjoy an opportunity to pursue a purposeful existence, for our customers to continue to experience the love and trust that they have for what we do and what we provide for them. And for us to do this in a way that it sets off a virtuous cycle of, you know, employees who are engaged, delighting customers who are willing to give you their loyalty, we actually had to start with ourselves. And so this is why I think it's really important to talk about this part of the journey, because oftentimes we just say, yeah, well, people are important, it's a nice thing, but we don't recognize the extent to which we, ourselves, are constrained to actually having people unlock their value. And so I won't go into this too much in detail for time, but it was important for me, to start with myself, to begin to understand how was I, as a leader in this organization, kind of constraining people in my own behaviors. And so we set a set of expectations that anybody leading anyone, a matter of a team of one or two, you should have in terms of an awareness of who you are, the experience you have with building relationships, how you pursue growth, the responsibility you have for society, and the responsibility you have for co-creating the future of the enterprise ourselves. And that's a kind of a weird thing because, you know, inviting people to be part of creating the future is like, yeah, but that's your job. But when you really atomize it and say on a daily basis, you invite your employees to be part of creating the environment that they're in, and you actually do it, you know, because you could say that, but then not really do it, you know what I mean? Like, yeah, we have it up on the wall, and we have a suggestion box and everything like that, but no one really checks the suggestion box. No, not like that. Like people could come to you in your office and say, you know, this is really not working, you know, we have a long line of people at a cashier station, could we do something about this? And you say, well, thanks, I didn't know. You get somebody here to go and help debottleneck, when people actually see that and experience that they could have, well, that's almost like the boss work, then I could come up with a little suggestion like that. Boy, I mean, it's marvelous. You begin to really unlock the potential of people. And so I just want to make sure you appreciate that it doesn't come automatically. It comes through work on oneself and ourselves. And that's absolutely essential to unlock this kind of value. And then, well, you guys know this story, right? You know the story. We used to be Neil and Massey. We used to look like all these things here on the left-hand side. And in 2014, we became Massey. And many people didn't know that we actually were all those things on the side. What's the lesson here for this conversation? I have to tell you that, you know, we weren't too sure. People ask, why are you doing this? When you can get a group of people centered around an identity and a common purpose, you get a completely different way of bringing the mass of people together to achieve something. And so, okay, you can understand at a corporate level. Think of it as at a country level, right? If you could bring a country to, and yeah, I mean, there would be more icons in a country, right? Together around a common identity and purpose, the power of what can be achieved is tremendous. And that, quite frankly, was our experience. We didn't just do that. We also kind of changed the way we organized ourselves. And this part is really important. You see, you know, what we're going to do is we're going to take the parts of our business that we have the most competence in, that we are most competitively advantaged in. And we're going to look at the potential for that to generate growth. And we are going to focus ourselves in those areas. Okay, that makes sense. Why I didn't do that all along? Well, you know, I don't know. But we did then, all right? But we didn't just do that, and this is the really, really important part. What we did is we gave those businesses much greater autonomy. We gave them decision-making rights that they had never enjoyed. You know, delegations of authority that were really significant. And we said, okay, you know, you're going to run this business like it's your own business, and you're going to have minimum interference from me and the center. Well, this is, of course, a little, I guess you could compare it to, like, you know, sending a 13-year-old off to college or something. You know, there's this, like, are they really ready? You're not too really sure, and will something break? And for me personally, I'll speak honestly, it was a little kind of frightening, you know, and because, you know, you do that and you say, well, okay, well, Mr. Warner, where's your job? Right? These businesses running autonomously. But I got over that with some help. But what's important is that we began this journey of pushing autonomy into the business. This is really important, really important. Because as you push autonomy into the business, people act responsibly. Now we set up some, you know, guard posts and stuff. With this autonomy came greater responsibility. So each of these big units now had a board that kind of looked like the Massey Holdings board. They had independent directors, they had an audit committee, a people and culture committee, they had members who were not part of their business, and now they had to answer the kind of questions I used to have to answer in the Massey Holdings boardroom. They now had to answer. It's kind of like, okay, now your turn to grow up. But what this has done is it has led to a level of ownership for what the experience is that is being pushed further and further and further into the organization. And, you know, it has unleashed for us what we call Massey energy. It's unleashed an energy where people feel confident. They're no longer waiting for to be told what to do. It's released an energy of possibility, like you don't think of why things can't happen, but you think that this is possible. It's changed the way that we actually think about forecasting and budgeting. We dream. We set outlandish targets as opposed to a specific number that if you don't hit, you're going to get whipped. It's really funny because we also have this responsibility that you now have, and you really feel it. Like somebody else isn't responsible, you are truly responsible. And then there's this part of the energy called abundance. And actually really believing in abundance. And this is a very important part, don't miss this part. You gotta find ways for when everybody's working hard and you have success, that everybody feels like they got paid, that they experienced some financial participation in this great performance. And when that starts to happen, it's like, wow, I love to work harder. I love to look for problems to resolve. Because when I do, not only will we kind of be a better place, but I could, buy some more gifts at Christmas. I could afford a better car. And this is really important when you translate it into results. Our results have been quite satisfactory over the last 3-4 years. And I think that there's a direct correlation to this in unlocking and unleashing the potential in the Caribbean, and how our capital markets have some bearing to do that. So the first thing I wanted to use that introduction is to say, even though we're here talking about finance and capital markets, really orienting ourselves to a vision around people, I think is essential. If you start thinking about how you direct capital from the perspective of the potential this could have to impact the lives of people, you're starting to think in the right place. If you have a vision that says, we want to instill a particular mindset in the people in our countries, a mindset of, yeah, I could take this on. It's my responsibility too. Not that I am going to look for somebody else, like the Minister of Finance, to take care of me. I am going to pick up my bootstraps and find opportunities for me to be successful in this world. But to do that successfully, I have to have capabilities. We have a responsibility, all of us in this room, for doing what we can to make sure that young people are growing up with the capabilities that will equip them for the future. And then have real opportunities for them to succeed. Our crime problem in Trinidad is an opportunity problem. When people don't see opportunities, but they see other people doing well, it's an incentive for them to find the opportunity which is in crime. How do we create opportunities that are different? Well, it's really hard to start a business. It's really hard to get a contract. It's really hard to get employment if you have a record. How do we create the space that people could get access to capital who need it? Who could be recognized that you don't have to change your address to be, someone who's employable? This is really important. We have to unlock opportunities. And then we have to allow and appreciate rewards. There's almost like a stigma if you've done too well. Imagine if you're talking about a stock market, Prime Minister of Jamaica talk about building wealth in the community for everybody, but if you do well in the stock exchange or you've started, that's not a good thing. You're now starting to get, towards that 1%, crew, and that's not a good thing. But somewhere we want to have a society, a culture that recognizes that, hard work brings a reward, and a reward is not a bad thing. So, what are some of the things that we might want to think about? There are all sorts of constraints. All sorts of constraints. We talk about, okay, you want to find capital and give it to small and medium enterprises? Yeah, but what about the corruption to get the contract? What about the arbitrary application of, and subjective application of certain rules at the, whatever, ministry for getting the piece of land and the who you know, and that's how we have, we got to invest. If we think that people are the way to unlock our economic potential, we have to invest and recognize we have to eliminate these types of constraints. We cannot talk about it because there's anti-corruption index, but I don't know if we appreciate the extent to which that is what is holding back average people in our countries. We talk about our public service. If we had the orientation that what we were trying to do was to serve people, and what we had in our public institutions was how do we serve people to give them the opportunities and a chance to actually be responsible and build wealth. We have a different orientation to how we look at it versus the rules-based. And it would be a lot more fulfilling job to be part of helping people fulfill on their dreams. And then, then the controversial one, right? I have this one up here, and I put it up. We are still relatively small communities. And somehow, many of us don't embrace the opportunity that migrant people provide to our economy. And we make it a problem. And we don't regularize them. So they're not in the tax system. They're not in the health system. So what are they to do? So then we say, well, okay, but they bring in crime to the. But I mean, if you actually regularize this, bring people into your workforce, they usually are the hardest working people that you could find, right? So we gotta commit ourselves to eliminating these constraints. And we gotta do it because we want people to be successful. And now, finally, to the capital markets, right? But you get my point that if you just try to enhance capital markets, but you're not really creating opportunities. You're not making it easier for any of these businesses or entrepreneurs who have an idea to actually access the capital market because they don't have the capability, because we haven't oriented our funds towards taking that type of risk. It don't make no kind of sense. Regionalization. I am so happy to see all of you from the regional stock exchanges here together this morning. This really fills my heart with hope. I love that you're going to ring a bell or something. So I'm trying to figure out what this bell is for. I feel it has something to do with the launch of the Caribbean Index. I feel so, but I'm guessing. But we are so far behind the dark ages, right? We're really small. We have 4 or 5 of you around the table, and we're all separate stock exchanges, all trying to get some volume. What if we all came together? Oh, but where would it be? Who would own it? Who's going to be the champion? Where the office going to sit? And all this stuff that gets in our way of real progress. So regional integration, you guys are ahead of the curve. Thank you so much. I can just imagine there's a lot of selflessness that is involved in your conversations for you all to be here this morning and for you all to be launching this region. So congratulations and thank you. You are demonstrating what's possible, and quite frankly, I'm inspired by it. Then, of course, we have this challenge with unbanked. So as big as the capital market is, we talk about, do you know how much money there is in mattresses? Again, from these migrant workers, but also people who are just unbanked. Again, okay, so we talk about it, and a few institutions have some initiatives for unbanked, and we're skipping along with it, and we're making a little progress. But if we really took on the mindset of we're here for our people, and that's the way we're going to unlock growth, we'd fix this fast. We'd make this urgent. And the last thing I want to address is what I think the Jamaican Prime Minister talked about and what I heard last night in the mentorship program we're planning for the SMEs through TTSE. But, through the work I do with the CPSO, we do see a number of great ideas, entrepreneurs who have something, but they don't have the wherewithal. They don't know how to write a business plan. They don't know how to make, financial projections. They've been in business, but they never kept accounts. And so there's some place where, as we think about putting capital markets on steroids, we need to solve this problem if we really want to get to this segment of the business community where I think there is true value to unlock. So that's pretty much all I had to say. I just really do believe that unleashing creative capital of our Caribbean people is really how we unlock the economic potential of the Caribbean. And if we focus on unleashing creative capital of our people, we'll actually find ourselves accelerating our economic development very quickly. Thank you very much, ladies and gentlemen.
Our thanks to you, Mr. Gervais Warner, the chairman of the CARICOM Private Sector Organization, and of course, president and group CEO of Massey Holdings Limited. Mr. Warner, thank you for the spark. There are times when you sit in conferences and have to contemplate, how did we get here? And now that we're here, where are we going? 2 points to support your presentation this morning. From time to time, there are those who conduct various roles, and they present themselves as just the driver, just the cashier, just the security guard. They're actually more than just the driver, security guard, or cashier. And it's the empowerment that allows for them to really play their part. And finally, one other point. In 2005, November 16th to be exact, memorable day, sounds familiar to anyone in the room? I had one job, just one. Get a signal from Bahrain to Port of Spain. One job. That one job united a country around a Dennis Lawrence goal, thanks to Dwight York, that took us to the World Cup. One job. That bell, in a few minutes, has one job. But the power of the toll of that bell is going to make a memory for the 40th anniversary of the Trinidad and Tobago Stock Exchange. And by extension, a memory for the regional stock exchanges. One job, as small as it may be. Let's leave our region for a moment and turn our attention now to a presenter from the National Stock Exchange of India Limited. Mukesh Agarwal is a business leader with about 3 decades of experience in financial services industry, including credit rating, mutual funds research, equity research, fixed income research, industry research, and indices. He has been part of various regulatory committees and subcommittees in India on topics related to indices, bond markets, mutual funds, to name a few, and is at present the CEO of Indices and Data at the National Stock Exchange of India. India's largest stock exchange, is also the world's largest derivatives exchange by trading volume contracts, as per the statistics maintained by the Futures Industry Association, the FIA, for calendar year 2021. His presentation is via video, so once again, as we direct our attention to the screens, please welcome to address you Mr. Mukesh Agarwal.
Good morning, Mr. Com Imbert, the Honorable Minister of Finance, Mr. Ian Narayan, Chairman TTSE, Ms. Eva Michelle, CEO TTSE, ladies and gentlemen. I would like to thank the board of TTSE and Ms. Eva Michel, CEO TTSE, for inviting me to speak at the conference. My heartiest congratulations to TTSE on 40th anniversary and congratulations to the regional Caribbean stock exchanges on the proposed launch of regional index. The launch of regional index will go a long way in overall development of the capital markets in the region, and the index will be a barometer of the regional capital markets. I will start with introduction to NSE and NSE indices, and thereafter I will speak about the role index companies can play in development of capital markets. National Stock Exchange of India, or NSE, is the world's largest derivatives exchange by trading volume in terms of number of contracts as per the statistics maintained by Future Industry Associations, or FIA, for calendar year 2021. NSE is ranked 4th in the world in cash equities by number of trades as per the statistics maintained by World Federation of Exchanges, or WFE, for the calendar year 2021. NSE was the first exchange in India to implement electronic or screen-based trading. It began operations in 1994 and is ranked as the largest stock exchange in India in terms of total and average daily turnover for equity shares every year since 1995, based on SEBI data. SEBI is the regulator of India. In the last financial year, that is April 2021 to March 2022, NSE had market share of 93% in cash equity, 100% in equity derivatives, 82% in currency derivatives, and 57% in interest rate futures in the Indian markets. NSE has a fully integrated business model comprising exchange listings, trading services, clearing settlement services, indices, market data feeds, technology solutions, and financial education offerings. NSE also oversees compliance by trading, clearing members, and listed companies with the rules and regulations of SEBI and the exchange. NSE is a pioneer in technology and ensures the reliability and performance of its systems through a culture of innovation and investment in technology. Now coming to NSE Indices. NSE Indices is a 100% subsidiary of NSE and is the largest index company in India with more than 25 years of experience. The NSE Indices owns and manages Nifty 50, the flagship index of India, and also computes, maintains, and publishes more than 330 real-time and end-of-day indices covering both equity and debt asset classes. We also provide index creation and maintenance services to a few other exchanges and would be happy to extend support in the maintenance and calculation of the proposed regional index. We actively participate in various forums and contribute to policy making related to Indian capital markets. We host annual India ETF conference and also publish index dashboards, research reports, white papers, articles on passive investment strategies. These research papers play a very important role in creating awareness about the indices. Our experience has been that media picks up content from these research papers and publishes the same in the newspapers. We have also won 2 awards, Best Index Provider in India and Best ECG Index Provider 2022 from Asia Asset Management Hong Kong. We have won these awards for 3 years in a row. Now I will start with global ETF industry. The asset under management, or AUM, of global ETF industry was $8.87 trillion as at August 31st, 2022, and has grown at an annualized rate of 18% over the last 5 years. If you look at this asset, within that, US accounts for 71% of the assets, Europe accounts for 14.5%, Asia Pacific accounts for 11%, and other jurisdictions account for 3.5%. Further, within the total AUM, equity AUM accounts for 75% of the assets, fixed income accounts for 18% of the assets, commodities and others account for 7%. Now I will talk about the passive funds industry in India. This includes both exchange traded funds, or ETFs, and index linked funds. While both ETFs and index funds are passive as they track the underlying indices, the basic difference between the two is that ETFs trade on an exchange and the investor has to buy the same through his broker from an exchange at around the NAV, or net asset value, prevalent at that point of time, whereas in case of index funds, one has to buy it from the asset management company directly at the end of the day, NAV. The first ETF in India was launched in January 2001 and the growth was slow till March 2015 with an asset under management of $1 billion only as on March 31st, 2015. Initially, the industry was growing slowly as distributors did not push these products with no incentive for them to push these products and also due to lack of awareness of these products. The AUMs started picking up thereafter. Some of the key drivers of the growth in AUM are disinvestment through ETF route by Government of India, decision of Employees Provident Fund or EPFO, India's largest pension fund, to invest in equity routes through ETFs, increasing awareness of the passive investments, and also the inability of majority of active large cap funds to outperform the indices. If you look at the Indian AUM, the AUM of the Indian passive industry is about USD 73 billion as on September end, and there are a total of 257 passive products available in the country, with the breakup being ETFs around 135, index funds 105, and 17 commodity linked products. The industry has grown at an annualized rate of more than 50% over the last 5 years. In fact, the number of products has more than doubled in last 30 months, and in last 18 months, more than 100 new products have been launched. In India, equity accounts for 74% of the total assets, fixed income accounts for 22% of the total assets, and the remaining is accounted for by commodities. In India, the percentage of debt is higher as compared to global trends due to increasing popularity of target maturity debt index funds. I will talk about these funds later. The passive investments share in the overall mutual funds asset under management in India has increased from 3.8% in March 2018 to 14.9% in September 2022. Globally, the market share of ETFs as a percentage of mutual fund industry is also similar at around 14.5% as on quarter 1 2022. The share of equity ETFs AUM to total equity ETFs AUM in India today stands about 20%. Overall, we have passive products available on 51 unique equity indices and 35 debt indices. We also have ETFs and index funds available on 9 global indices, that is investing in global stocks. However, Nifty 50 at $28 billion, Sensex 30 at $13 billion, and Nifty Bharat Bond Index Series at $6.2 billion USD. These 3 indices account for 65% of the AUM of ETFs or index funds. Average daily trading volumes of ETFs at NSE is around USD 46 billion, while it is small, but it has been increasing, and it has increased by 70% plus over the last 2 years. I would like to highlight important case study of target maturity debt funds. Till mid 2019, equity passive products were popular. However, Government of India was keen to launch a debt ETF as they believed that this will help in increasing the retail participation in bond markets, and they approached us for creating an index for the same. After a lot of brainstorming internally, our product team came up with the idea of creating a target maturity bond index, as we felt this is a product which will be good from retail investors' point of view. This is something similar to bullet shares available in USA. I would like to mention that the AUM of target maturity funds has reached an AUM of almost 15 billion USD in less than 3 years, and we expect the product to continue to grow at this pace going forward also. We at NSE Indices take a lot of pride in launch of this product, as we created the whole concept in India. Initially, when this product was launched, no one in the industry believed that this product will be successful. But this has been a hit product both with the investors and the product issuers. This is mainly because of the unique features of the product. Let me highlight the same. First of all, the target maturity ETFs or funds have a maturity like a bond. That is, they mature or expire on a given date just like a bond. The major benefits of these products are, first, predictability of returns. That is, at the time of investment, the investors know what is the yield of the fund, and if they hold on till maturity, They are expected to get similar returns adjusted for fund expense ratio. Next is high credit quality, as initially they are mainly investing in government securities or state government bonds or bonds issued by AAA rated government owned companies. Next, third point is low effective tax rates as compared to similar investment opportunities like bank deposits. And the final unique feature is liquidity, as the investors can exit anytime based on their requirement at the then prevalent NAV without any penalty, whereas in bank deposits, any premature withdrawal may attract some penalty in India. Overall, you can see that index players play a very important role in the development and growth of passive funds market. The index companies have to keep coming out with new indices regularly and also work closely with the fund managers while constructing these indices. An index company has to keep in mind that whatever index it is developing, it should represent the underlying market segment and theme, and also it should be replicable. We have also created new indices on which the exchange has launched derivative products. Most popular indices for derivatives trading in India are Nifty 50 and Nifty Bank. However, in the last couple of years, NSE has launched derivative contracts on two new indices. First one is on Nifty Financial Services and the next is Nifty Select Midcap. The volumes in derivative products on Nifty Financial Services index have started increasing. NSE Group takes a lot of initiatives in promoting passive products and creating awareness for these products. Some of the initiatives taken by us can be summarized as follows. One, increasing awareness amongst retail investors by organizing various conferences and seminars, advertisements in newspapers, TV channels, and promotion through social media, etc. Launch of innovative indices which can be tracked by passive products. Incentive schemes, launch of incentive schemes for market makers to increase liquidity in these ETFs. Some of the challenges faced by the Indian passive industry are as follows. Number one, low trading volumes. Very few ETFs have good liquidity and low impact cost. Retail investors' participation continues to be low at 7 to 8% due to lack of awareness amongst the retail investors on the benefits of passive investing. Assets under management is concentrated in few indices. As I mentioned earlier, top 3 indices account for 65% of the total AUM of the industry. The Indian regulator, Securities and Exchange Board of India or SEBI, is keen to develop the passive funds industry in India and has recently announced changes for the development of the passive industry in the country with the aim to overcome some of the challenges as mentioned earlier. In the end, I would like to thank the organizers once again for giving me the opportunity to speak at the conference, and I wish the conference a great success. Thank you all. Namaskar.
Our thanks to you, Mr. Mukesh Argawal of the National Stock Exchange of India, and sharing your insights and experiences on the NSE there. Ladies and gentlemen, I'd like to acknowledge the presence of the Minister in the Ministry of Finance, the Honorable Brian Manning, MP, who has joined us for the proceedings this morning. Welcome, Minister. On to our feature address this morning, and this will be presented by the Minister of Finance, the Honorable Colm Imber, MP. Minister Imber is a qualified civil engineer and registered engineer with degrees in engineering and postgraduate degrees in law. He is an elected member of Parliament for over 30 continuous years and as a cabinet minister for an aggregate cabinet experience of over 18 years. Professionally, Minister Imber is a member of the Chartered Institute of Arbitrators and the Energy Institute and registered with the Board of Engineering in Trinidad and Tobago. Minister Imber has also acted as Prime Minister in the absence of the substantive Prime Minister of Trinidad and Tobago on several occasions. This morning, in his substantive capacity as the Minister of Finance, will you please welcome to address you, ladies and gentlemen, the Honorable Colm Imber.
Thank you very much, and good morning, everyone. And thank you very much for the short version of my resume. I was a little worried there for a while. So, my colleague in the Ministry of Finance and in the Parliament, the Honorable Brian Manning, Minister in the Ministry of Finance, the High Commissioner for Jamaica to Trinidad and Tobago, His Excellency Arthur Williams, members of the Regional Stock Exchange. I heard Mr. Warner talk about you. I understand we have people here from the Jamaica Stock Exchange, Barbados Stock Exchange, Eastern Caribbean, and Guyana. So welcome. Mr. Narain, Ian Narain, Chairman of the Board of Directors of the Trinidad and Tobago Stock Exchange, and other members of the board. Ms. Eva Mitchell, Chief Executive Officer of the Trinidad and Tobago Stock Exchange, and many other distinguished guests, sponsors, the media. It is indeed an honor to speak on this auspicious occasion, the celebration of the 40th anniversary of the Trinidad and Tobago Stock Exchange, or the TTSE. It is the main stock exchange in the Republic of Trinidad and Tobago, the only one, and the largest stock exchange in the Caribbean region, with a market capitalization of $150 billion. I'm told the second largest, the Jamaica Stock Exchange, has a market cap of just under $110 billion. I was actually just checking that on my phone to make sure I got it right. And Barbados is smaller than Jamaica, so I have all of that right. It is noteworthy that a number of companies from other CARICOM countries, such as Barbados and Jamaica, also cross-list their stocks on the Trinidad and Tobago Stock Exchange. And on behalf of the government, I wish to encourage more and more companies within CARICOM to cross-list on the TTSE. The TTSE today is the natural progression from the primary market and the call exchange of the 60s and the 70s, emanating from the then government's policy thrust, which was twofold. On the one hand, focusing on localization of the banking and manufacturing sectors, and on the other hand, the establishment of a regulatory framework under which these entities can operate effectively. The proclamation of the Securities Act in October 1981 led to the formal opening of the Trinidad and Tobago Stock Exchange. It was formally opened, formally launched in 1981 under the auspices of the Ministry of Finance. Over the years and leading up to the current time, the original securities law was deemed to be ineffective, and there is no doubt of that. Regulation was difficult. Many of the provisions of the original law were unenforceable. The Ministry of Finance, recognizing this problem, worked with the exchange to introduce a more dynamic piece of legislation, eventually repealing the 1981 Act and replacing it with the Securities Industry Act of 1995, which brought into operation the establishment of a Securities and Exchange Commission. This 1995 Act vested with the Commission the authority to maintain surveillance over the securities market and ensure orderly, fair, and equitable dealings in securities. All market actors, issuers, underwriters, advisors, stockbrokers, dealers, and so on, must register with the Securities and Exchange Commission, which is responsible for controlling and supervising their activities. The exchange, on the other hand, regulates trading on the secondary market, as well as the activities of members of the exchange, subject to oversight by the Commission. This was then followed in 2012, when the Securities Act of 1995 was repealed and replaced by the Securities Act 2012, which is now the governing legislation. Now, since our independence in 1962, a policy objective of the government has been the building and strengthening of a mix of institutions with an emphasis on growth, development, and prosperity. One of the first institutions was the Central Bank of Trinidad and Tobago, which has successfully, and I dare say expertly, governed the monetary and financial landscape for 6 decades. Thereafter, the Trinidad and Tobago Unit Trust Corporation, which has provided our citizens with financial autonomy through the mobilization of savings into productive capital investments. We have continued this process for deepening and widening our capital market as a major source for the funding of private and public activities. The July 22, this year, additional public offering of First Citizens Bank placed 10,869,000 FCB shares at a price of $50 per share into the hands of private and institutional investors. And that's a key indication of our policy as a government in terms of widening our capital market. The public response to the FCB APO has been an outstanding success, similar to our National Investment Fund public offering in 2018. The FCB APO was heavily oversubscribed by 55%, attracting applications for 16 million ordinary shares with a value of $843 million, of which $543 million was transferred to the government through Corporation Sole. Now, the target was $543 million, but we had offers for $843. So it was clearly a very attractive offering. This APO followed 2 previous public offerings for the government's shares of FCB. And the result of this evolutionary process is that 40% of the shares of FCB are now in private hands, quite a departure from the situation 9 years ago, where originally the government owned 100% of this bank. And I was looking at the number of shareholders, if I digress. And I think between FCB and some of the other state enterprises that the government has put into the capital market, we're looking at perhaps over 20,000 new investors in stocks. We also initiated the divestment of shares in another state enterprise, Trinidad and Tobago NGL. TTNGL was incorporated in 2013 by the National Gas Company to enable the public to participate in an initial public offering to own an equity interest in Phoenix Park gas processors. Through that IPO, and in 2015, an additional public offering, the public, individuals and institutions of Trinidad and Tobago now hold a 75% equity interest in TTNGL, while NGC holds the remaining 25%. And that is, in essence, the 2 entities that we have divested, which have added 20,000, I have to call them ordinary people, to the entire system of trading in stocks and shares. So at the level of the government, we have over the years sought to broaden and deepen the availability and value of equities on our local stock market by making available to the public valuable shares in high-performing state enterprises. But to turn now to a topic that Mr. Warner touched on for most of his speech, small and medium enterprises. Our SMEs have long been playing a critical role in our development thrust. Generally employing a limited number of individuals, they have been sustaining livelihoods, especially among women, youth, and groups in vulnerable situations. At the level of the government, we have been focusing on lowering and eliminating barriers faced by these enterprises. We have implemented several initiatives geared towards the development and furtherance of the SME sector. One of them, which we hope to have fully launched by the end of next month, is the long-term loan guarantee scheme. And something Mr. Warner said, what Gervais said, led me to think. And I just want to let you know that we in finance, we don't just engage in photo opportunities, ribbon cuttings, and other political things. I actually have a meeting with the central bank every week. And looking at the changes in access to credit since COVID hit us, I asked the central bank to give me some ideas on how we could improve access to credit and how, in particular, we could improve access to credit for SMEs. The central bank looked all over the world and eventually found a model in the Far East. We used a blend of a model that is in place in Singapore and in Hong Kong, and we've come up with our long-term loan guarantee scheme, which is essentially a long-term, virtually permanent fund with an amount of $500 million. In this long-term loan guarantee scheme, which is geared only at SMEs, we, the government, will be guaranteeing 80% of loans from the commercial banking sector to SMEs. And that, you'll hear more about this in November when we launch that scheme. But what we found, and Gervais spoke about it, is that the greatest difficulty that SMEs face is access to capital. And they don't have the discipline. Why don't they have the discipline? I'm not sure. Because they don't keep proper accounts. They don't follow, good management practices. Therefore, when they approach a bank for a loan, the answer is no. So one would think that SMEs would understand that it is important that there is discipline in the management of their entities. But I'm sure we'll get there as a country. We also have the Gateway to Trade program, the Export Booster Initiative, and the Grant Fund facilities. These are initiatives of the Ministry of Trade, administered by Export TT. Coming now to our SME mentorship program, which we will launch next week. This is a collaboration between the Trinidad and Tobago Stock Exchange, the Central Bank of Trinidad and Tobago, and the Ministry of Finance. It provides small and medium enterprises with the guidance required to transition successfully and grow their businesses while practicing good corporate governance. Again, this was the outcome of one of my regular meetings with the central bank, because we only have two, and I hope they're not here, struggling SMEs on our junior stock exchange. And really, when we looked at Jamaica, because I asked the central bank to look around the world and look around the region in particular, and we found the junior stock exchange in Jamaica extremely vibrant. And you would have heard the Prime Minister of Jamaica speak about the fact that they have 46 companies on their junior stock exchange. So we borrowed significantly from the Jamaican SME experience in this respect, particularly with the introduction of mentors. But again, you'll hear more about that when we launch that next week, together with the central bank and the stock exchange. We are going to assist SMEs with accessing financing via tax incentives for listing on the Trinidad and Tobago Stock Exchange. A full tax holiday for the first 5 years, exemption from the payment of corporation tax, business levy, and green fund levy, and a 50% reduction in taxes for the second 5-year period. So stay tuned when we launch that next week. With respect to the capital market itself, the importance of capital markets in the Caribbean cannot be underestimated. The financial and insurance activities subsector has averaged a significant 8% contribution to real GDP over the last 3 years and represents a building block for our nation's economy. An efficient market provides competitive financing alternatives, which then generates spin-off benefits for the real economy. In addition, money market price signals gauge the costs of government capital and permit monetary authorities to control liquidity. In addition, market participants enhance the level of professionalism, independence, and corporate governance. Both primary and secondary markets are important to the effective allocation of scarce capital. To the extent that capital markets are poorly developed or lack liquidity and transparency, domestic investors will reduce investment in favor of consumption and thereby lower savings. Furthermore, investors, both regional and non-regional, will seek to diversify portfolios and will tend to invest in countries with more developed liquid and transparent capital markets, which offer a wider variety of instruments. And I was chatting to the CEO about the fact that you can sign up with E-Trade or one of these online trading platforms and go and trade on the New York Stock Exchange right away. You can even get a margin account, just like that. So this is where we have to go with our Trinidad and Tobago Stock Exchange and also the regional stock exchanges. So those factors and the ability to enter and exit at will are critical to a well-functioning market and significant in most Caribbean markets. As a government, we remain committed to addressing the challenges within the capital market, ensuring that conditions are conducive to the development of these markets. This means that Trinidad and Tobago continues to work to a more competitive tax system, as illustrated by our establishment of the Trinidad and Tobago Revenue Authority, which will consolidate and strengthen the domestic tax system, mindful of the role and impact of other jurisdictions in the global tax arena. We also continue to build an investor-friendly climate with higher energy efficiency and greater geographic dispersion of economic opportunity, along with improvements in infrastructure. We must have sound public finance and a stable macroeconomic environment that minimizes risks, lowers uncertainty, and instills greater investor confidence in the economy. And now move on to information technology and the digital economy. In this post-pandemic era, we are improving the efficiency of the public sector, of which institutions like the stock exchange, as important stakeholders, will benefit. By expanding technology, digitization, and digitalization, we're improving public sector performance as we undertake diverse approaches to reform key institutional arrangements, utilizing an e-governance ecosystem. In fact, I digress again. In my budget statement in September, I was quite interested in the progress being made towards electronic payments. We are seriously making progress. I had tasked all public service departments to be fully digital by the end of this year. I'm not sure we're going to make that target, but we're going to be very close to making all payments digital by December 31st, 2022. Now, through the coexistence of computer systems, internet, telecommunications, electronics, and so on, I don't need to tell you that businesses are experiencing radical changes in their efficiency to reduce their transaction costs. You see it with the banks in particular. Every other day, we have some advertisement from the banks about which one of them is ahead of the other one in terms of electronic transactions. I saw something from Scotiabank recently. Quite interesting. So central to the government's development mandate is a fully digital Trinidad and Tobago, which will provide the catalyst for growth and diversification of the economy. Different and multifaceted arms of government are now charged with the responsibility of directing the necessary changes to accomplish this objective, and have been mandated to ensure that high-speed, broadband, internet access, accompanied by the requisite ICT infrastructure, is made available for all citizens. The focus remains heavily on schools and institutions, preschool, primary, secondary, and tertiary, as well as other important institutions and agencies. We expect a lot out of this. In the context of the utilization of digital access tools by the national economy, including government services, ease of access to digital commerce will be provided through a range of digital cultural shift activities and a national digital database. And let me talk now about the Ministry of Trade. Through the TTIFC, which is the agency that the Ministry of Finance has mandated to ensure that all transactions become fully digital by the end of this year, we learned that the Ministry of Trade needed to step up and become far more digital in terms of transactions. And I have, in fact, been talking to the Minister of Trade with respect to modernizing the single electronic window so that persons who access the single electronic window for business will be able to transact online, make whatever payments that are necessary online. And I can assure you, I will be pushing the Ministry of Trade to get this done. I think it's extremely important. So we are facilitating the implementation of several major projects, including digital procurement, digital mobile money solutions, nationwide 4G and 5G, the development of a national digital database, and a number of government services becoming fully online and available through a digital system. The focus will be on stakeholders' participation in the transformation process. Appropriate funding and incentives have been provided for training and for the acquisition of equipment. For example, in 2020, all taxes were removed on computers and associated equipment, including mobile and digital equipment. So I've just touched on a few things. I don't want to spend the next 3 hours speaking. This is not a budget speech. So I've just touched on a few things. But I just want to say that I listened very carefully to what Gervais had to say. And he hit the nail on the head. The problem that we have in Trinidad and Tobago, in order to deepen and broaden our capital market, in order to increase participation in our stock exchange, we really need to help our SMEs, help them in many different ways, help them to become disciplined, and give them the necessary help to get access to capital. And the government is committed to doing that. So I congratulate the stock exchange. 40 years, I was telling Eva Mitchell, I think I did a transaction in 1983. So that would be 39 years ago. So I probably did one of the first transactions on the Trinidad and Tobago Stock Exchange. Time really flies. Congratulations. Thank you.
Thank you to the Minister of Finance, the Honorable Colm Ember, first for your time and for your greetings and remarks and setting the context of the activities associated with the ministry here in Trinidad and Tobago. Thank you very much, Minister. Well, it's time now for the ceremonial launch of the regional index. I invite Eva Mitchell, CEO of TTSE, to join us on stage and to assist with the introductions in the first instance. And in a short while, the bell will take prominence.
Good morning again. Good morning again. I hope we are enjoying presentation so far. I wish I had a mic, but we'll work with this. Ladies and gentlemen, we are here to celebrate the launch of the Caribbean Index, which is a collaborative effort among the 5 regional exchanges, namely Jamaica, Barbados, the Eastern Caribbean, Guyana, and the Trinidad and Tobago Stock Exchange. So before we launch, let me just give a little background. What is an index and why is it important? Stock market indices measure the performance of a grouping or basket of individual stocks. They are often used as benchmarks for mutual funds, investment trusts, and other vehicles that trade a portfolio of equities. Beyond that, these indices can be key indicators of financial health and business trends, whether you're looking at a particular industry, the stock market overall, the entire economy, or, in our instance, the aggregate of a Caribbean market and economy. According to the Index Industry Association, there are more than 3 million stock market indices, including bonds, worldwide. Some are well known and often quoted, like the S&P 500 and the Dow Jones Industrial Average. Others are more obscure, followed mainly by financial professionals. Already, the TTSE has a suite of indices that were created over our 40-year history, starting off with the TNT Index, which measures the performance of all companies listed on the stock exchange. With the prevalence of cross-listing later in 1995, the index was renamed the TTSE Composite Index, and two new indices created, namely the Trinidad and Tobago Stock Exchange All TNT Index and the TTSE Cross-Listed Index. As the name suggests, the TTSE All TNT Index tracks the performance of local companies denominated in TNT currency. While the TTSE Cross-Listed Index tracks the performance of companies listed on the TTSE whose primary jurisdiction is not Trinidad and Tobago, those companies are and at least listed on one other exchange in the Caribbean. There is also the SME Index, which was created in 2017, which tracks the performance of the companies listed within that particular market. Additionally, the TTSE reports on a number of sector indices. The Jamaican Stock Exchange has similar indices, but interestingly, they report an index that tracks the performance of the 15 most liquid stocks, as well as indices that track a number of sectors as well. And likewise, the Barbados Stock Exchange reports on a composite, a local, and a cross-listed. Both the Guyana Stock Exchange and the Eastern Caribbean Securities Exchange reports an index mapping the performance of all equity securities. So we have a background, but how did we get here? The genesis of the Caribbean Index started at a meeting between myself and Dr. Street Forrest at the office of the Jamaican Stock Exchange earlier this year, in January, where we sat down to discuss some strategic items that align both entities. We spoke on a number of items, but most relevant for today, we discussed the steps taken in the past towards regional integration and the benefits of it to our capital markets. One such initiative was the Caribbean Exchange, known as the CXN, which did not materialize, but now looking back, some may wonder or may say that it may have been ahead of its time. Hopefully, as we seek to deepen our relationship with each other, the CXN can become a reality sometime in the future. But in the interim, we must overcome some of the challenges that prevented us in the past, as the benefits of us acting as a region far outweighs the values in us acting in silos. The Caribbean Index is a step towards this. The intent of the Caribbean Index is to provide all investors, both regionally and internationally, with an indicator of the performance of the Caribbean region. It consolidates the activity of the main market stocks across the different exchanges into a single unit of measurement which can be tracked and monitored. The Caribbean Index will be available on all partnering exchanges. The index has the potential to attract more capital toward the region by being a bellwether for international investors looking for opportunities within the Caribbean. It gives an aggregate view of the financial health of the Caribbean and can help the region's small-sized economies attract the much-needed capital and build economic resilience. The framework, importantly, governing the index is in keeping with best practice, having adopted IOSCO standards. So, ladies and gentlemen, as we launch today, October 21st, 2022, I would like to invite the Honorable Colm Imbert, Minister of Finance, onto the stage with me, our regional heads of the stock exchanges, Dr. Marlene Street Forrest of the Jamaican Stock Exchange, Marlon Yard of the Barbados Stock Exchange, Trevor Blake of the Eastern Caribbean Securities Exchange, George Edwards of the Guyana Stock Exchange. Everyone on stage with me to officially launch this index.
Whilst they're making their way on stage and positioning for this special moment, Members of the audience, we're going to wake you up just a bit because fiscal policy dictates that we should be able to count down from 5 to 1 together. So stand by. Here we go, folks, ladies and gentlemen. It's time for the countdown to the ceremonial launch of the regional index. We go to the screens and the sound for a moment. Here we go. 5. Join us. 4. Again. 3. Here we go. 2. 1. Congratulations all. Thank you, Minister. Thank you to all members of the Stock Exchange on stage from the region. And here's the information you've been looking for. Grab a screenshot of that, and about 20 years from now, it'll be worth quite much more than what you're seeing this morning. Superb, thank you, and congratulations once again to all who have made this moment possible, particularly as it occurs against the backdrop of the 40th anniversary of the Trinidad and Tobago Stock Exchange. Well, ladies and gentlemen, we're taking a pause in our formalities at this time. When you return after the break, there will be the presentation from the president of the Jamaica Securities Dealers Association. However, before I release you from this area, permit me to just acknowledge, especially our diamond sponsors, Answer McCall Group of Companies, Answer Merchant Bank, Guardian Media Limited, First Citizens, Massey, NCB Capital Markets Limited, Republic Bank, the Unit Trust Corporation, as well as also to give special mention to those who fall in our Emerald Sponsors category, JMMB Investments, Scotiabank, and Angostura. We'll take a pause for a short while. There's coffee, tea, and other refreshments available for you in the pre-function area. And when we return, we won't ring the bell again, but you should be back in here within another 10 to 15 minutes as we prepare for the continuation of this morning's segment of our program. Minister, thank you. Minister, thank you. And of course, we'll continue with the proceedings in just a short while. Thank you. Ladies and gentlemen, for those of you who are in the pre-function area, we kindly ask you to make your way back inside at this time as we continue with our program. We invite you to return at this time for the continuation of the morning session. Thank you. Welcome back. Great to have you back inside. And as you're making your way in, for the purpose of the members who are on panel number 1, if you are part of panel number 1, could you make your way to the sound area at the back of the ballroom here, just to ensure that you're mic'd up one time for the continuation of the proceedings thereafter. Thank you so much for your assistance, and welcome back. As we get into the continuation of our program this morning, our focus now is turning to the Jamaica Securities Dealers Association, and speaking on the theme, the role of the market maker in building strong capital markets in the Caribbean. We're delighted this morning to have with us President of the Jamaica Securities Dealers Association, Mr. Stephen Gooden, who is also the Chief Executive Officer of NCB Capital Markets Limited, NCBCM. Stephen Gooden is the president of the Jamaica Securities Dealers Association, the lobby group that represents securities dealers throughout Jamaica, a position that he has held since 2017. Stephen has led the change to promote the interest of the securities industry in Jamaica, to develop and improve its standards, while ensuring an active role is played in advancing Jamaica's economic agenda, market expansion, and development. He has a great passion for the deepening and integration of regional capital markets, an agenda he has been championing throughout his career. Through this, Stephen believes that the Caribbean can become a substantial niche player in the global capital markets. In his capacity as the CEO of NCBCM, the Wealth, Asset Management and Investment Banking arm of the NCB Financial Group, he has held this post since 2013. Under his leadership, NCBCM has become the leading capital markets outfit in Jamaica, while expanding its reach throughout the Caribbean through the establishment of hubs in the Cayman Islands, Trinidad and Tobago, Barbados, and soon to be in Guyana. His ascension to executive management began at the age of 26 when he was appointed general manager for one of Jamaica's leading fund management companies. Rooted in his deep affinity for market digitization, he has pioneered the launch of the region's first digital public equities application platform, GOLPO, in Jamaica and Trinidad and Tobago. This is part of NCBCM's digital suite of investment solutions that allow investors to make trades from anywhere in the world using any digital device. Stephen Gooden currently sits on the board of directors of the Jamaica Stock Exchange and several companies within the NCB Financial Group. He's also the chairman of 2 publicly listed junior market companies and sits on the board of directors of Trans-Jamaican Highway Limited. Ladies and gentlemen, will you please welcome to share on the role of the market maker in building stronger capital markets in the Caribbean, Mr. Stephen Gooden.
Thank you, Master of Ceremonies. The Honorable Colm Imbert, Minister of Finance, the Honorable Brian Manning, Minister in the Ministry of Finance, His Excellency Arthur H.W. Williams, High Commissioner for Jamaica to Trinidad and Tobago, heads of the regional stock exchanges, Mr. Ian Narayan, Chairman of the Board of Directors of the Trinidad and Tobago Stock Exchange, and other distinguished members of the board, Chief Executive Officer of the TTSC, Ms. Eva Mitchell, and staff of the exchange, special invited guests, members of the media, ladies and gentlemen, good morning. On behalf of the Jamaica securities dealer community, I want to extend a hearty congratulations to the TTSC on achieving its 40th year milestone. I've been watching keenly with admiration the progress made by the exchange over the past few years. Initiatives such as the enhancement of tax incentives for SME companies listed on the TTSC will without a doubt increase the vibrancy of the domestic capital markets. Additionally, the facilitation of cross-listings will allow for greater integration across borders, not only in terms of mobilization of capital, but deeper economic integration as well. Wearing my hat at NCB, it is a journey that we are committed to, having last year become the 7th stockbroker on the exchange. I've been invited to speak on the role of market making in building stronger capital markets in the Caribbean. I start my presentation with 2 important assumptions. The first assumption is, since I'm asked to speak, I'm assuming that the Jamaican experience, both good or bad, is relevant to the topic. The second assumption is that the topic is relevant not just to individual markets within the Caribbean, but also as a collective across the region. Before we explore the importance of market making, I believe it's important that we fully appreciate the importance of the capital markets in the financial sector ecosystem. And the Prime Minister of Jamaica and Jervis Warner would have touched on some of these earlier. The capital markets at the core are financial markets that bring buyers and sellers together to trade stocks, bonds, and other financial assets, and enable businesses to raise financial capital or patient capital to grow and transform. This can be in the form of debt or equity. In essence, the capital markets channel the wealth of savers to those who can put it to long-term productive use while providing an attractive rate for savers. The capital markets provide that bridge for those that are in need of financing and those that have the risk capital to invest. It is not only an alternative to bank financing, it also complements it because by regulation, commercial banks are restricted from providing the type of longer-term or unsecured risk capital that the businesses may need. And firms need capital in the first place to access borrowing. The capital markets are also a critical funding source for infrastructure development. These developments have strong socio-economic benefits through the construction of roads, water and sewage systems, housing, energy, telecommunications, public transport, etc. These projects are ideal for financing through the capital markets via long-dated financing solutions. The traditional banks simply cannot provide 30 to 40-year funding. Moreover, the capital markets promotes public-private sector partnerships to encourage participation of the private sector in productive investments. The need to shift economic development from the public to private sector to enhance economic productivity has become crucial as regional governments continue to be financially constrained. The correlation between capital markets development and economic growth has been well established in the empirical literature. Capital markets mobilize additional savings, making more capital available to companies, which may in turn create jobs and facilitate real wage growth. It also helps in diffusing stresses on the banking system by matching long-term investments with long-term capital. Additionally, empirical evidence links capital markets and innovation, as well-developed capital markets play a key role in financing of technology and more generally of riskier projects and enterprises which are not usually financed via traditional lending. The ecosystem supporting the capital markets can be large and complex. The providers of capital and those seeking capital in the capital markets do not stand on their own and are supported by a wider network that work together to make financing possible. In the secondary market, there are 4 stakeholders other than the buyer and seller of securities that are very important. There is the securities dealer, the broker, people like me. These are institutions that facilitate the trading of instruments on behalf of investors. Some use their balance sheets to take positions to facilitate market making, and these dealers, brokers, are market makers. Second is the infrastructure, market infrastructure providers. They include the exchanges that facilitate trading, custodians that hold securities, registrars, paying agents, settlement platforms, as well as accountants and lawyers, to name a few. The third is the regulator. The overriding objectives of the securities regulator are the protection of investors, ensuring that markets are fair, efficient, and transparent, and as far as possible, reduce systemic risk while facilitating market development. And fourth is the government. The government is responsible for setting policies geared towards market growth and development, with there being an overarching economic growth agenda. Now let's explore market makers and their relevance to the financial markets. A market maker in our markets are typically securities dealers that buy and sell securities at all times for its own books in return for a profit. So what is the relevance of market makers to financial markets, especially developing markets such as ours? Market makers help to ensure the smooth functioning of financial markets by investors to buy or sell securities. How do they do this? They buy securities when there's oversupply in the market and sell securities when there is an undersupply. When the demand for securities is low and supply is high, the market maker will buy the securities. When the converse is true, market makers will supply the market with securities to meet the demand. In doing so, they help to ensure adequate volume of securities so trades can be done seamlessly at all times. Market makers ensure liquidity. Market makers provide the following benefits to financial markets. In providing liquidity to financial markets, they help to support price discovery. They stand ready to provide quotes for securities, thus providing the market with pricing where trades actually take place. Additionally, by being available to buy and sell securities, market makers ensure that investors can know current prices for securities, that is, prices do not go stale. Market depth is also closely related to liquidity. In deep markets, large transactions can be executed without having a significant impact on prices. Market makers buy excess supply and build inventory, especially in the case of large transactions that have the ability to impact prices significantly, thus helping to create deeper markets. They play a critical role in ensuring that the success of primary market transactions. By taking a position in these transactions, potentially taking up excess supply of primary market security, market makers allow primary market transactions to be executed faster and more efficiently. And this will be critical as the exchange embarks on its journey of listing multiple SME institute entities. Furthermore, in times of financial stress, markets become more volatile, and literature shows that when volatility is persistently high and bid-ask spreads are wide due to supply and demand imbalances, the participation of market makers increase significantly. In fact, a 2009 report done by the Emerging Markets Committee of the International Organization of Securities Commissions found that market makers in general add to the stability, liquidity, and transparency of financial markets, and therefore are highly desirable participants in emerging markets. Having established the importance of the capital markets in the financial ecosystem and the importance of market making, let us now explore the evolution of Jamaica's capital markets and the role played by market makers in its development and deepening. Jamaica has a very interesting story. I've been told that Jamaican dealers are very aggressive. As a matter of fact, it's a commonly held view that Jamaicans generally are very aggressive. Many have attempted to explain this phenomenon dating as far back as the colonial days. But what is true, though, is that Jamaica's capital markets is the most active in the English-speaking Caribbean, and a big part of that has to do with the role played by market makers, both on the debt side and on the equity side. For the purposes of this discussion, I would argue that one could look at the evolution of Jamaica's capital markets and market making in three phases: the early phase, the growth phase, and the consensus phase. The early phase began 53 years ago in 1968, when the Jamaica Stock Exchange, JSE, was founded, and ended in the late 1990s, when Jamaica experienced a financial crisis. The establishment of the exchange started an early capital markets culture. Within the first year, the JSE listed the ordinary shares of 34 companies incentivized by government policies. 4 to 5 years later, this peaked to 42 companies in that era. Additionally, there were a number of corporate debt and preference shares, some convertible, that were listed. Imagine that level of sophistication in an open outcry market of the 70s. During this period, market turnover as a percentage of market capitalization was as high as 10%, with an average close to mid-single digits. And I believe the turnover now in Jamaica is around 2%, a little over 2%, and a little under 2% for the Trinidad and Tobago Stock Exchange. The early successes can be attributed to not just policy directives, but the fact that at the onset, brokers undertook the role of market makers, as they were encouraged not only to act as agents, but to trade as principals. The growth phase started in the late 1990s, the longest phase, and saw developments that propelled the industry through several transformations with the emergence of the securities dealer industry as we know it today. This phase began with the sovereign debt market, catalyzed by a business model that was once centered around the intermediation of Government of Jamaica instruments. This was funded by repurchase agreements that complemented the existing equity offering of brokers. At the time, the government had an insatiable appetite for debt, while institutional investors and the average investor had a similar appetite for high-yielding short-term instruments, such as repos. Like most debt markets that are in a nascent stage, the sovereign securities ended up being the catalyst for debt market growth and development. As rates trended down towards the latter part of this phase, triggered by a significant reduction in GOJ borrowing, it facilitated a gradual reemergence of the corporate debt market and the expansion of the repo market to include corporate debt securities. It is this repo model that accelerated our market-making culture as securities dealers became active holders and traders of GOJ and corporate securities. At the same time, the equities market continued to evolve. With it, the role of the market maker. Between 2000 and 2016, we saw the addition of 4 or more brokers to the JSE. This resulted in an uptick in market turnover and greater linkages between the Jamaica Stock Exchange and the Trinidad and Tobago Stock Exchange. We saw active trading of cross-listed securities and the presence of a Jamaican broker domiciled in Trinidad and Tobago. Positioning in the markets was the order of the day, and I recall as a young equity trader, not too long ago, I used to chase and exceed monthly income targets of 100,000 US just from market making of equities alone. In 2009, we had the creation of the junior market on the JSE. This not only transformed our market with the support of market making, but also saw the beginnings of a private equity culture by virtue of private investors viewing the junior market as a viable exit. This era was a defining period in our markets. Jamaica had tapped the international capital markets in a huge way, while at the same time embarking on a number of regulatory reforms coming out of the crisis of the 1990s. However, our macroeconomic indicators were weak. Between 2000 and 2016, Jamaica's GDP growth averaged less than 1%, while debt to GDP peaked at 138% in 2012. Jamaica was junk bond territory. These circumstances drove a very interesting behavior. Low economic growth and a volatile market fuel hunger and passion and market innovation. In arranging local capital markets transactions, dealers got very meticulous and creative in structuring our own investment-grade securities and making markets for sale, rather than relying on overseas investment-grade credits that we don't know the street address for. We focus on credits we were familiar with. This resulting in us making a market in our own local investment-grade securities, facilitating higher yields while achieving the desired objectives. And we had to build a whole ecosystem around that to de-risk our own investment-grade securities. When the 2008-2009 global financial crisis hit, our homegrown securities stood up, and those that didn't, we knew where to go, who to call, and work things through, as opposed to those international securities that went belly up and bondholders had to line up behind each other in hope of recovering a portion of their investments. When the GOJ global bonds tanked, it was the local market makers that supported the bonds across the yield curve, avoiding contagion into the domestic financial system. When the GOJ resorted to the IMF in 2010 and had to go through a debt restructuring exercise, 2 restructuring exercises actually, the entire market came together around a consensus of putting our competitive biases aside to focus on Jamaica first. Right? As I said, it was a very defining moment for us. We collectively work ourselves out of the crisis, and we wouldn't have been able to do so with overseas investment grade, say mortgage-backed securities that turn junk grade overnight. As we achieved macroeconomic stability and we started feeling the effects of GOJ's fiscal reforms, which led to gradual reduction to GDP towards a target of 60%, we saw increased appetite on the part of corporates to tap into the capital markets. As a matter of fact, the size of the non-bank financial system in Jamaica today, which are active participants in the capital markets, is just under 2 trillion Jamaican dollars, exceeding that of the banking system. So it's fairly large. The next phase, the current phase, is the consensus phase, which I'd say started in 2017. And it is in this phase that we saw tangible demonstration of acceptance by the government and the regulators that the domestic capital markets play a critical role in driving financial inclusion, wealth distribution, and economic growth. And our Prime Minister touched on that earlier today. With this in mind, the government of Jamaica in 2018 established a capital markets deepening committee chaired by then recently retired Chief Risk Officer of the IMF, David Marston, who is actually a Jamaican. This saw an acceleration of a number of market-enabling reforms. We saw reforms geared towards expanding the allowable assets for institutional investors such as pension funds and insurance companies. There were reforms that made it easier for issuers to tap into the capital markets. One such reform was geared towards encouraging companies that were already listed to be indifferent between a public listing of debt and a private placement, which in Jamaica takes only 2 weeks to register. The promotion of a local ratings culture was embarked on, along with steps taken to enhance the liquidity of instruments in the market. There was the acknowledgement that market makers are key in this regard and represent an important player in deepening the markets and thus enabling more robust GDP growth. On the agenda now is capital reform. And while this reform is focused on strengthening the resilience of the financial system, it is also designed to facilitate greater market making, which requires balance sheet and optimal use of capital. In a short time, we saw the regulator change its posture from one that was viewed as anti-market to being co-champion of market growth and deepening. I've had the benefit of being JSDA president during this phase, and I can say that although not perfect, we have seen a more consultative regulator and a significant narrowing of the trust deficit that is typical between regulators and practitioners. And I'm sure Dr. Marlene Street-Forrest will back me up on this. There has been the creation of end-to-end digital platforms, right? There's a creation of the Go IPO platform, which facilitates participation in public placements from anywhere in the world digitally. And this was actually spearheaded by NCB Capital Markets, which we rolled out in Jamaica first and recently in Trinidad. And I could go on and on as it relates to some of the stuff that Jamaica did to enable growth and development of the capital markets. These reforms were all critical. What is clear from the Jamaican experience is that all market stakeholders have a role to play in encouraging market-making activity. In many developed markets, the three critical players are the government, the regulator, and the securities dealers, or brokers, if you may. And I'm going to start with the government and the regulator. And I'm also going to point to the Singaporean experience. For many, Singapore is touted as the capital markets model for developing countries. Singapore has developed its capital markets and regulatory framework to become a financial hub to reckon with, capturing top spots in several international rankings. Global management consulting firm McKinsey & Company, in its April 2017 Banking and Finance report titled Deepening Capital Markets in Emerging Economies, shared a 6-step approach on how Singapore was able to carry out a successful transformation, and I encourage you to actually read it. If I am to sum up this approach, it started with the creation of a very bold vision that was driven from the very top of the political directorate, political chain. The regulator was empowered and a regulatory framework created that was very pro-business. And thirdly, a mindset shift occurred, supported by relentless execution. Policymakers and regulators should not underestimate the impact they have in transforming market dynamics. The simple policy change, I believe, 2 years ago to encourage SMEs or to further encourage SMEs listing on the TTSE, from my vantage point, over the next few years will singularly transform the TTSE and play a critical role in capital formation and ultimately promote a culture of private equity. Securities dealers, through their market-making activities, play an even more important role in driving market deepening. I'll go back to what happened in Jamaica. Market development and innovation were driven by the local brokers. The regulator and the policymakers were forced to catch up and ultimately become enlightened. The success of the SME market and other initiatives will largely depend on the dealers, the brokers. The approach should not be to only arrange transactions, but rather brokers need to take positions and make markets. By doing so, brokers not only help to drive market expansion, but have the opportunity to earn significantly more economics. I've lived this in my past life, and I say past, as I now see myself as a Caribbean practitioner, not just a Jamaican practitioner. Yes, there are country-specific nuances, but I can assure you that the journey will be similar in many respects across the region. In fact, in Trinidad, the firms that are best positioned to make markets here are the Trinidadian brokers. The reality is that for market making to be effective, it requires a concerted effort from all stakeholders. Importantly, it will not unfold overnight, but the important thing is to start. Before closing, it would be remiss of me not to touch on regional markets integration. The reality is that market making is more impactful when there is scale. Right? That's why the initiative to launch the index and to further deepen the markets or integrate the markets, and what I heard Ms. Michelle said earlier on in terms of revisiting the CXN, these are things that I encourage. In today's environment, the buzzwords are transformation, disruption, mindset shifts, ecosystem plays, to name a few. These are words that we use at our board meetings, staff meetings, and even conferences. The region as a whole, the reality is that the region as a whole is filled with tremendous opportunities, and we are seeing significant cross-border commercial activities as businesses embrace regional commerce. Globally, the pace of innovation is at an all-time high, and this has not escaped financial markets ecosystems. While at the same time, as a region, there are significant challenges as it relates to the mobilization of capital across jurisdictions. These challenges are a result of regulatory and foreign currency issues, as well as mindset issues, to name a few. What I've just described, ladies and gentlemen, is a recipe for market disruption. Opportunities, challenges, an environment of innovation, that's a recipe for disruption. While regional exchanges have made significant strides when it comes on to innovation, more needs to be done in bringing the markets together. If we do not accelerate that agenda, we run the risk of stock exchanges as we know them today becoming artifacts of history and literature. We are seeing this take place with payment platforms that are becoming increasingly interoperable. Let us be more proactive, and I say us, Marlene, because I'm a director of the Jamaica Stock Exchange as well, in joining forces to positively disrupt ourselves as opposed to being disrupted by new emerging forces. To the TTSE, thank you for the opportunity to share this morning. Again, congratulations on your milestones, and I look forward to be in here in the next 40 years when you celebrate your 80th anniversary. Ladies and gentlemen, enjoy the remainder of the conference, and I look forward to seeing you next year. Thank you.
Thank you very much to the President of the Jamaica Securities Dealers Association, Mr. Stephen Gooden, and thank you for the perspective, especially from the Jamaican experience, the advocacy for more presence at a regional level, and of course identifying the various models that have worked and some of the lessons learned over Jamaica's tenure in the stock exchange. Thank you again, Mr. Gooden, and thank you to your team. It's time for a panel discussion, a bit of a chat. The powerhouses in the finance industry in Trinidad and Tobago are about to make their way on stage. If today was a day that you needed to go to the bank and you can't get to the bank, well, here's what. They're all here. Most of them, at least. We'll focus on harnessing the evolution of digital assets and reshaping the future of the capital markets for investors. And here comes the star power. We begin with Nigel Batiste, a career banker for the past 31 years who holds the position of President and Chief Executive Officer of Republic Financial Holdings Limited and Managing Director of Republic Bank Limited. Prior to assuming his current role, he served as Deputy Managing Director and Executive Director of Republic Bank Limited, General Manager HR and Managing Director of the Group subsidiary in Guyana, and he currently sits on the board of the Group subsidiary in Guyana, Ghana, Cayman, as well as other subsidiaries in Trinidad. Joining Nigel on the panel is the Group Deputy Chief Executive Officer Business Generation of First Citizens Group Financial Holdings Limited, Mr. Jason Julian. Mr. Julian is a chartered financial analyst with over 20 years of experience in the financial services industry. His career has covered consultancy with PricewaterhouseCoopers, management positions at an international bank. He was part of the largest financial services conglomerates in the Caribbean. He's a member of the finance faculty of the Arthur Lockjack Graduate School of Business and is a commentator, in fact, on economic, investment, and financial matters, and was also honored as one of the distinguished alumni of UWI St. Augustine. He's a past president of the CFA Society of Trinidad and Tobago and has served on the boards of the Mutual Fund Association of Trinidad and Tobago, among others. Joining Nigel and Jason on the panel is Mr. Gregory Hill, Managing Director of Answer Merchant Bank Limited. Gregory is a career investment banker and Caribbean business influencer who has served in leadership and executive positions at preeminent regional and international financial institutions and business associations for nearing 30 years, although at present he looks like 27. Keeping young at heart. Today, the AMBL Financial Group is unique in the Caribbean financial sector, encompasses non-bank financial institutions and a newly acquired retail commercial bank. Mr. Hill is chairman of Answer Merchant Bank Barbados Limited and a director of one of the region's oldest insurance companies, Tatil, which owns Tatil Life and has a significant branch in Barbados. In February of last year, AMBL concluded the acquisition of an international bank and launched Answer Bank Limited, of which Mr. Hill is a director. And also on the panel is Mr. Nigel Edwards, Executive Director of the Trinidad and Tobago Unit Trust Corporation. He's a leading authority on corporate restructuring. During his tenure as Chief Financial Officer at the UTC, he was instrumental in the UTC maintaining a robust financial position and ensuring its ability to optimize opportunities. Throughout his career, Nigel Edwards has demonstrated the ability to work successfully in dynamic environments, designing, leading, and executing strategies which resulted in impressive value creation. As Executive Director, he leads the charge in continuing the UTC's innovation thrust and strategic leadership and strengthening the UTC's competitive edge in the financial services sector. Those are our panelists. Moderating this panel is John Outridge, Chief Executive Officer of the Trinidad and Tobago International Financial Center, T&T IFC. John joined the T&T IFC as its CEO in August of last year. He is responsible for leading the company as it executes its mandate of driving digital financial services adoption across all sectors, so Trinidad and Tobago can maintain its position as the financial hub of the region and becomes a premier location for fintech-enabled services. And he has worked in both the public and private sectors regionally, with over 10 years senior management experience, and has supported many institutions in relation to providing strategic guidance on fintech strategies, as well as modernization of public financial management systems for various governments throughout the region. That was the short version. Ladies and gentlemen, on the theme harnessing the evolution of digital assets and reshaping the future of the capital markets for investors, moderated by John Outridge, please welcome Nigel Batiste, Jason Julian, Gregory Hill, and Nigel Edwards.
Hello. Hi, morning everyone, and thanks Wendell for those. That's the short intros I had for everybody else, so that kind of saved us some time. Good morning to everyone. Good morning to the Honorable Minister, the Minister of Finance, Brian Manning. Thanks very much, Eva, for arranging this panel. I have the envious position of keeping you before lunch, so I will try to make it as interactive as possible. And thanks again for my fellow panelists. I don't think I've ever seen such powerhouses on one stage. Hopefully nothing bad happens so that the capital economy of Trinidad remains intact. So what I wanted to do is to sort of give some context for the audience this morning to kind of carry us through some of the conversations, because I'm sure my panelists would not have reviewed the questions or prepared for it, so this should be very, very interesting. It's live on the spot, ladies and gentlemen. In recent years, financial institutions comprising the capital markets have begun to approach digital transformation with a level of urgency only previously seen in the consumer-facing financial services. The need to improve client service delivery, achieve greater efficiency, and enable new services, example through monetization of data, have converged of imperatives for all capital markets executives to explore technology should be used to redesign product offerings and operations. At the same time, we see new technologies entering the financial arena, such as distributed ledger technology, DLT, of which blockchain is most widely known. Right? And we have seen in recent times some of these cryptos and digital assets taking severe pendulum swings. And these things have captured the attention and public interest. So depending on one's perspective, this sort of advancements in technology could either disintermediate the capital markets as we know them, radically simplify operations for leading capital markets players, help expand access to markets for small business and retail investors, or simply fade into irrelevance, right? Who knows, chicken or the egg? But it's good to start having these conversations because, again, this is where we are at. And some of the drivers that you're seeing here, and some of the conversations we get with the panel is, what's really sort of making this take center stage and attention. We've seen a lot of currency devaluation risks taking place globally. People hedging against high inflation rates. This year alone, Argentina's inflation rate shot up to 80%. I was actually doing some research, and there was a quote from an economist in Argentina, and I quote saying, "Money there is like ice cream. If you keep a peso for too long, it melts in terms of how much you can buy with it." So this is to give you a sort of answer in terms of, you have people looking for safe havens for their capital, and obviously access to transactions where foreign currency challenges exist, moving value digitally. And most importantly, I heard a number of persons speak about it, particularly Mr. Warren in his exciting presentation, which I can't match, but financial inclusion. Yeah? So these are some of the things that we'll be sort of talking with these industry leaders, and I'm hoping I did a good job curating a question each, not to keep everyone too long. So I think we'll start directly on my right with Jason,
I get a short throw.
Yeah, and the long question. So financial institutions are focusing on a digital future. I saw recently FCB opened a new branch in Tobago. and I hope the digital future is not the drive-through. I hope it's a lot more, but so when developing ecosystem integrations, the traditional lenders like yourself see opportunities and partnerships with innovations. And the reason why I started with you, Jason, because I know not too long ago, FCB took a position in term finance as an example. So,
right. Okay. So afternoon, everyone. I have to admit, when I was first invited and I saw the topic harnessing the evolution of digital assets, I jokingly said to myself, this sounds almost like a thesis project, because there's so much to be covered in that powerful statement that's on the screen. Let me tackle the question. I'm glad you referenced the branch in Milford Road, and a shout out to my colleagues from First Citizens. Yes, it includes the technology. Right. And we take the technology very seriously, because how we view the markets and how we view the places in which we play is that there's an evolution happening all around us. So that investment is in physical infrastructure. There's also a lot of investment in digital and electronic infrastructure that go along with it.
Right.
But that said, you're right. We can't do all of this on our own. The way banks are designed by nature is that we are legacy institutions. We have large scales. We have large presence, but sometimes slow to move in some areas. We are very good at some things and slower to learn in other things. So we've recognized this, and in a sense, fintechs, as the name suggests, are almost frenemies to us. So we have alliances with fintechs, and we join forces with them in some spaces. Term finance is an example of that. And in other spaces, we compete head-on. But definitely we recognize the fact that these alliances are necessary and required for us to continue to evolve, to compete, and to continue to be relevant, and to find more efficient ways of delivering service to our customers. Now, I could go on this for the whole day. So I'm going to pause for now, unless you have another question.
Sure, no, I was just going to throw it over to Nigel B. I realize I have two Nigels on the stage, so Nigel B and Nigel E, just to differentiate, I don't know, Nigel, you could share a little bit about the Encash experience, because I know Republic has also taken its first leap from that partnership side.
So good afternoon, everyone, and let me start by extending my congratulations to the Trinidad and Tobago Stock Exchange on this 40th anniversary. I mean, I think it's a milestone worthy of being recognized. The Encash experience for Republic Bank has been a quite interesting one. And it speaks to, I believe, some of the challenges that even the evolution of digital assets in terms of reshaping the future of the capital market will encounter. And that is familiarity, that is acceptance, that is people breaking from the norm. So in our case, Encash, which actually is not a very creative name because it does away with cash, has taken a while to really take off. People have become so accustomed to using either cash or a card that the idea of using neither, has kind of taken a little while. But it's gathering some momentum. It does facilitate person to person, person to business, business to business, right? Without cash exchanging hands at any point in time. And so we see it as just one aspect of what the future will hold from a technology perspective, but increasingly, if you look around the world, an increasingly important one.
Sure. Greg, I don't know if you want to add anything to that, because if I could quote you from my conversations, Answer Merchant Bank is the first cloud banking native bank in the world, so I know you are very, very bullish on technology. Just to give you some spot, I don't know if you want to comment.
Sure, thanks for that. And again, congratulations to the Stock Exchange on your 40th anniversary. And I'd also like to extend early Diwali greetings to the Hindu community in Trinidad and Tobago. Well, yes, we're a 100% cloud-based bank. We moved to a cloud-based platform in 2019, which allowed us to pivot quickly during the pandemic. But that decision was strategic in the sense that we chose software, we chose a cloud-based system to be able to have open architecture and open API technology that will allow us to build on that platform and build on that stack to add digital tools to widen the range of products and services that we plan to bring to market very soon. So that's all part of the overall architecture. that we are building for long-term growth of our banking activities. I think it's commonly known that we purchased a commercial bank, rebranded it Answer Bank, and I'm happy to say that later this year, we plan to launch a digital banking application that will allow our customers to have, hopefully, pain-free banking services.
Okay. And Nigel, I'll be remiss because, I have one has been looking at unit trust for quite some time. It has been a very revolutionary type institution. You guys deal with a very, very large customer base. I don't think people realize how many unit holders they actually have in Trinidad and Tobago. I know the whole digital first and customer experience is very important. If you want to share anything from the UTC side of things.
Sure, absolutely. And I'm happy to share not just our present experience, but sort of a glimpse into the future. So Unit Trust holds, amongst its unit holders, we represent over 80% of the adult public in Trinidad and Tobago. It's a massive number. And wherever you sit with such a huge portion of the population, there are opportunities and threats that go with that. So when Unit Trust started, we were the only show on the road. And what happens when you have 100% share of the market? There's only one direction that you can go from there. So where we sit now, it gives us an opportunity to think about how do we see not just being part of this market, but launching a presence in the region, for instance. So Eva team, this parallels some of what your experience parallels some of what we're engaging on. And the only way that you can do that and do that successfully in today's world is to leverage digital technology and digital assets availability. So not unlike Gregory and his team at Answer Bank, we've gone with an entirely cloud-based system. All of our software, so it's not just the products in the cloud, the software actually runs in the cloud. And that allows us to replicate services very quickly. And so it helps us to think about what does the future of a customer experience look like. And I won't say much about the future, but it's not dissimilar to Nigel talking about cash, because there is no reason why people need to carry around cash in the future. And the way we think about it, there's every reason to allow unit holders to be able to settle without the need for cash. And that's what this technology is allowing us to do.
Right. And I mean, it's no incidental that the person sitting on top here, you guys represent a significant portion of the population that you have banking relationships with. So just by simple decisions that you make, that can absolutely impact the way people behave, just like as my Minister of Finance was alluding to, which I heard December is our timeline. I don't know if he said 22 or 23, but I'll have to check in with him. But, we'll go with the latter. But, it's interesting because a lot of the things we talk about in capital markets, and I hear a lot of people in terms of, and then you look at the Jamaica experience, when you land in Jamaica, apart from seeing the sea, the first thing you see is billboards for IPOs. That's the first thing that you're sort of greeted with, and banks have a huge, what I would call role in that, because you are the guys, you are the reals that get that money into there, and coming into that sort of question, we see in a lot of, I would say, attractiveness, a lot of interest in terms of what we will call, and I see models from the fintech side, a lot of P2P services. People wanted to send money to other persons, that, and hence I guess the attractiveness of fintechs, because you sort of reduce that sort of friction from that, And I want to ask a question because, there have been a lot of conversations, you read a lot of the articles and it, you hear the terms like challenger banks and digital banks. And I remember a conversation I had with you, Nigel, a couple of years ago where you gave me a quote, time is longer than twine. So, I don't know in terms of all these things. Yeah, Nigel B, sorry, yes. You don't remember your own quote. So any thoughts on these sort of, because it's good to have a mixed participation. We're hearing some cloud and we're hearing some legacy, but in terms of the future, in terms of these banking models in the Caribbean, these digital-only banks, what's your perspective?
I think it is inevitable. Whether it will be digital-only might be open for debate. I think the challengers will probably be digital only because of the barriers to entry otherwise. But they will face a major challenge because I believe most of the financial institutions who are around at the moment can also eventually offer digital solutions to their clients. So you will have the option between a combination of digital only if you want it from your existing financial institution, digital and in person, or in person. Right? So eventually we'll have a buffet. But digital only banking services is inevitable if someone chooses it.
Anybody, any panel would like to add in?
Yeah, I mean, so I think there's a sense in which digital only has already sort of broken onto the market. It's no secret that there are already institutions that are digital only that exist right now. And you know, a week ago, a friend right in this hotel, we were just chatting about how he's thinking about disrupting another segment of the loans market, as it turns out, in Barbados. And in a 10-minute conversation, we came up with a thought that links what in the old days capital markets institutions used to call book building, right. And how do you build that into a fintech model that would disrupt the lending market. So you know, I think there's going to be a fairly swift shift simply because the development of that it happens very quickly, and they exist, and they are motivated. They're highly motivated to move the market forward. So I think we're moving very quickly.
Just to add to that, when you look at the banking community across the Caribbean, there's a large percentage of the population that is underbanked, unbanked, and underserved. So with the growing need for inclusion and a better equality of income distribution and access to capital and financial literacy, it's only a matter of time that the fintechs step up and onboard the underbanked population using mobile tools and other types of wallets to bring them into the financial architecture. Now, that's not to throw the baby out with the bathwater. The legacy financial institutions have a very important role to play in the safety and soundness of our financial system. And the regulators have a role to play in that as well. But as the world becomes more customer-centric, financial services will have to evolve further. And larger organizations, it's a bit more difficult to be as nimble as the fintechs. So I believe that there's a role for both to coexist, and I think that there'll be a lot of modernization of the traditional banks. They're going to automate a lot. They're going to change their front-end interface and become, more agile. But also, the fintechs have a role to play as well. And together, I think it will lend itself to a more inclusive market. But that would grow the size of the financial market, so everyone will benefit.
Yes. So John, so banks have been around for centuries. Mm-hmm. It's one of the oldest industries in the world. What I think you're going to see is the evolution, not just of banks, but the evolution of banking. Right? So we've been talking about it as one big blob, but really, if you dissect that, there's lending, there's investing, there's payment systems, there's savings. Yeah. So there's a lot that could be dissected and that could have different pieces of evolution as well too. Sure. So some of the examples we've used have been focused on the payment space. Yeah. But even as Nigel kind of hinted to, there's a teaser coming on the investment space. Right. So when you look at banking and how people's lives have to be impacted on both their asset side and their liabilities, I think you're going to see different pieces of evolution, and it could evolve in different ways.
Sure. And I wanted to share some details to the room because it's going to bring me to my next question in terms of the sort of drive towards digital assets, because we've been speaking about the unbanked and the underbanked as this sort of nebulous term. I was just bringing up some statistics from our central bank, and this may be old hat to some of you in the room, but it will actually be new, just to give you some context. In 2021, cash withdrawn over the counter at commercial banks was about 3.5 billion US. Cash withdrawn from ATMs was about 4.1 billion US. Right? So that number is 7.6, right? Debit and credit card payments was about 3.6. So out of our total retail payments, money going through Trinidad and Tobago, 11.2 billion. We see basically 68% of that was done in cash. So, when you look at that even from a market opportunity, this is money that is not touching our financial sector. And again, when you kind of look at the capital markets and you see the opportunity, and I guess, Nigel, you might see some of that in terms of, those are the things, these are the people who are not putting the money into the institutions and not putting the money to work, and these are telling tales, right, and it's very, very interesting, in terms of that. If you kind of disaggregate the numbers, that's just over 7 billion US, as I said, circling the economy. So I would say the banks are here, but the addressable market is here, So again, from the industries, how do we get that? Which kind of brings me to my question about, digital assets, right? So again, we have all these new categories such as crypto and stable coins and digital securities and NFTs. I'm assuming you guys heard some of these somewhere. Yep. TikTok, all these different things, Right? So in terms of some of these things, you'd realize these sorts of products are more or less a natural fit for your banks, right? These are the, I guess, for the gig economy and the alphas, these are the new products that they're probably interested, that they gravitate into, right? Nobody wants to come into a bank. I mean, to get a VTM card, that was when I was 16. You feel good. You had something physical, right? They want something on the phone, something that they could absolutely, we have a lot of entrepreneurs now kind of coming up in town, so, that is where they're going. So seeing that these things are sort of the conversations happening, are these conversations happening in your boardrooms in terms of how you address that? Don't all jump at once. Yeah.
Well, I mean, I could go, but before I tackle that question, I just want to go back to the fintech story, because I don't want to believe that there's harmony in terms of where everybody believes the fintechs will go, because I do believe that the fintech sector has a number of challenges to overcome, and in my own view, there are really maybe 3 categories of fintechs that have some kind of a long-term future. I think the first category of fintech is going to be the people who will help businesses, whether it be a financial institution or any other business, right, become a bit more efficient as they go forward. And you can pick whichever category you want to go into. I think the other category of fintech that has some kind of a long-term future are the ones who will help businesses maybe generate additional revenue lines, whatever that might be. And I think the third category of fintech is going to be the ones who actually help with the plumbing, which is where people like the payment service providers kind of come into it. So there will be many categories of fintechs, the majority of whom will not make it, right, over time. With respect to digital assets, I think the first issue really, actually, for me, when I saw the question, was really understanding what was meant, right? Because the examples you called out, cryptocurrency and NFTs and what have you, yeah, you've heard about those, right? Some of them, I believe, are quite speculative. But there doesn't seem to be a clear understanding, at least by everyone, as to what is meant by digital assets. And I did see the questions. I did have some research done for me. Okay? And I was none the wiser after reading all of the, all of the research. But based on that research, which is quite shallow, so don't ask me any questions on it, it seems as though there will be a future for digital assets. But how that future evolves depends on the regulatory environment within which it evolves. Because if the regulatory environment is not established, and I'm talking about regulatory environment around who can issue a digital asset, who takes custody of it, where it trades, all those. If there's not a proper regulatory environment, then what will happen with digital assets is that it'll become the wild, wild west. And eventually, it's going to lose the confidence of the same individuals who initially were so gung-ho for these digital assets to take on a greater role. In terms of in our boardroom, right, the conversations are more along the digital transformation, and to the extent that digital assets will play a role in the future, it will weave its way into those discussions.
Anybody want to add? I guess we wouldn't be seeing Bitcoin on Republic Bank's balance sheet anytime soon, then, Nigel.
What's that?
I guess we wouldn't be seeing.
Not anytime soon. You need a little more time for that.
So I want to come at the question from a different angle. So right. I respect Nigel's comments on the, I guess the...
And you don't have to agree with him, Gregory.
Yeah, okay. No, they told me I had to behave. Digital assets take many forms, right? I mean, we talk about crypto, NFTs, and different types of stable coins and tokens. But, I'm more excited by the rails on which these assets run, which is usually blockchain technology. And, I think there's a lot that we could use as a financial institution industry to use these rails to bring to market new products and services using, blockchain. Blockchain technology. We could use it for KYC, for instance, so to allow KYC to be shared across the financial institutions using end-to-end encryption, connecting it with the national digital ID. Eventually, hopefully we'll get all our customers to have digital KYC files that they can store and they can use to transact financial transactions. So I agree, Nigel, from the standpoint that the bottom has to fall out in terms of some of the digital assets, but certainly the infrastructure is very important. And I'm aware that, for instance, in Singapore, the Monetary Authority is working with a few global banks to try to digitize certain traditional assets to bring a lot more liquidity into what would have been traditional products. I don't see any reason why we can't, as a community, look at tokenizing our local TT Treasury bills, look at tokenizing unit trust units, my mutual funds that we do at Answer Merchant Bank, and by doing that, hopefully it will be a little bit more inclusive. The transactions can clear and transfer a lot faster. It'll be more efficient, but more importantly, we'd add more liquidity to these instruments. The borrowing costs for the sovereign will come down because there's a larger market. So, I mean, we have quite a bit of work to get there, but the work is already being done. I think JP Morgan is now looking at digitizing a couple of mutual funds, looking at some of BlackRock's funds as well. So we could look at more traditional investment products and find ways to use the technology to make it more accessible and more efficient.
Yeah, sure.
But it still has to start with the regulatory environment.
Yeah.
Absolutely.
I mean, you can't do that without the regulatory
I think I saw central bank in the room, Nigel. I might have gone for a cup of
But
coffee.
it's not the central bank. It's not only the central bank.
Yeah.
So, John, I wouldn't want to move past the question, and I
Sure.
definitely agree with Nigel in terms of the regulatory environment is the prerequisite for any of this. Even for some of the things which currently we wrestle with, we need the regulatory environment to support us. We look at our colleagues from envy in Barbados and Jamaica. I think we envy because we've seen so many things that you all have been able to start to do that we haven't even begun to contemplate how to start to do. And I think the environment has to help us with that. But that said, I wanted to go back to the question around what's the boardroom discussion. So I listened to Gregory, and they said we could disagree, right?
Yeah.
Right. So I listened to Gregory, and I have to disagree with one thing in that I think what is digital assets, and I want to make sure we're using the same definition, right? Digital asset is anything that, of course, electronic or digitally available or stored that has a value that could be transferred, and this is the part that I want us to get. That could be, in a sense, fractionalized.
Right.
So I believe that we have an opportunity here, through the digital assets, to create a whole universe of new products.
Right.
Because of that feature, or those features, right? Even if you think about the different use cases we could debate for the rest of the day, a simple thing right now, we look at the real estate markets, we look at our bond markets. Oh my God, we've been living with this for a long time, and a lot of that is analog markets, right? But there's opportunity there that even those things which currently exist could easily become digitized and create new products.
Right.
Asset-based tokens, which could be fractionalized.
Yeah.
So the same way how we have a piece of property and we go to the registrar's office and we had to look for the title and lawyers make lots of money, lawyers in the room, there's an opportunity.
Right.
So there's an intermediary that is going to be affected. There are new products that could be created. And remember what we're trying to achieve here, right? That this is the stock exchange. The wider the participation of individuals, the wider the pool of investors, and what creates that is the same way how the unit trust allowed for unit holders and 80% of the adult population.
Correct.
You have to find a way to fractionalize opportunity.
Right.
And I think those features allow for that to be created. Now, what those universal products would look like, that's what we're going to discover for the next 40 years.
So Jason, I want to thank you for agreeing with me.
Yeah. So before, again, sorry, I'm
No,
sorry to hold
that's
you on to
this.
this, but I feel there's a really important...
People here to hear from you all, you know. They heard from the Minister of Finance about me already. They want to hear about you all.
Yeah, so there's a really important piece that, and I don't want to go over what the other panelists raised, but I think there's an important piece that it's easy to lose. So if I look into this room, my guess is that the average age, I'm not going to ask people to put their hands up if you're under 30 years old, right? But my guess is that the average age of this room is north of 30. That's important because when you talk about digital assets,
right?
You listed a bunch of them, but there's a particular class. Do you know that it's possible to buy digital real estate? You can buy a piece of digital real estate that's next to Snoop Dogg. You might have to pay $300,000, real dollars, for that piece of real estate. It's nothing more than pixels, but think about it like, what would you pay for Amazon as a URL? There's real value associated with that. The challenge I feel is that when you sit where we sit, and I know we all look incredibly young, but the truth is when you sit at our end of the age range, making decisions that ultimately come out of our frame, the challenge is to do that in a world that is changing rapidly. I know there are a bunch of people who are in the sort of 20 to 25 range who are making those investments in the metaverse, who are spending real dollars to outfit their avatars in the metaverse.
Right.
And you know, so we can sit here and not be conscious that that's a reality.
Yeah.
Or we can add, because Nigel, I think there's a fourth category of the fintechs that will make it into the future, and it will be those who find a way to harness that demand and understand what value creation is in that world, and help to guide people through that. So I think that's another aspect of the conversation that we need to begin having, and not enough of us are having those conversations in the board.
Right. And I want to touch back on the regulatory side, right? Because I mean, that's a key part of it, right? Because even when I look across all of your institutions, with two of you, I could withdraw some of my liquidity from my crypto and put it in my bank account. One of you don't have the regulations to do it, and then one of you simply not doing it. I'm not going to call names, but again, it kind of gives that sort of operating environment, right? And I know we're talking a lot about the SME market, and when you look at these new businesses, I think the Minister of Finance mentioned it, when you look at small businesses, they're relatively undisciplined, right? My job is to make money. I'm not going to sit down and put a HR policy and have a proper accounting framework and so forth. And, one of the things I think is absolutely, and I would like to hear from you guys on your perspective, in terms of the whole concept about crowdfunding, because you do have, and you would have seen, particularly just on I would say the APOs that would have taken place, there seems to be a real appetite for people to get into these sort of investments. People seem to have the money and they want to park it somewhere and they want to see the sort of growth, right? I'm sure if you ask half of the 20,000 that the minister mentioned, where's the return on capital from the FCB share? I just know it ain't going down, And I think there are a lot of businesses, like for example, I just want to kind of share this with you and kind of hear from you guys. When you drive down the highway by El Socorro, you see these car washes, these manual automated car washes. We had about 6 of them. I think it's Coop's Car Wash. If they came to market with an IPO, that would be extremely oversubscribed because everybody wants to participate in these sorts of businesses, So I don't know if you guys want to share your perspective on things like that in terms of these small businesses and get into the capital markets and what role the banks can sort of play in terms of identifying what I would say those, not the mid-caps, but the small, the small to mid-caps that we really don't hear about.
Well, so UTC is not a bank, so I'll start off.
That's not a problem. And the question there, I think there are two aspects to that, John.
Yeah.
First of all, and something that Nigel mentioned, which is education.
Yeah.
So, everybody's interested in making a little bit more money, right? And the people who are a little bit more discerning, is the more aware they are of the risks. So I think to the extent that we can improve the education and so everybody kind of understands what's playing off, and that applies to the digital assets as well as anything else, the APO, the IPO. I'm not so sure that there'll be people running behind, right, the IPO for the car wash. And part of the reason, right, flows back to the stock exchange itself, the SEC, right? The governance arrangements that they will want to put in place for that car wash, right? Might make the car wash not so profitable after all. Okay? And those governance arrangements are required when you're talking about third party or public funds.
Right.
Which is the same thing really and truly with banks. You know, why we have all the various regulations that sometimes we might rile against, but you understand why it is necessary. Because you are dealing with somebody else's funds. I mean, crowdfunding is an interesting case, right? I mean, yeah, maybe you get repaid, maybe you don't, but you take the chance.
Right.
I mean, I can't say I'm not going to repay someone, right? And no stock exchange worth its weight in gold is going to allow any and everybody to come and just list on the stock exchange without ensuring that there's some minimum criteria which are met. Yeah. Because the investing public expects that someone has ensured that that criteria is met.
Right.
So from the bank's perspective, the challenge we have always had with some of these smaller enterprises has been, you know, the governance arrangements, you know, the financial information which is required to enable you to make a proper assessment of any kind of proposal that is in front of you. You know, you get things on one piece of paper, you know, looking to borrow millions of dollars. Right. And now I have no problem in lending it if the central bank was okay if I then told the pulsar, sorry, I cannot give you back your money because I've lent, right, to someone who cannot repay.
Right.
So the governance, I think, is very important. And once the governance is in place,
right, sky's the limit.
What happen after?
Yeah. Any other comments?
I think Nigel's spot on. That. The
Yeah.
only thing I would add to that is, you know, the capital markets, there's different pools of capital for different purposes. So, you know, there's angel financing, venture capital, private equity,
Right.
the public markets, debt, equity, mezzanine, right? Each of these things exists because there's a risk appetite, there's a time horizon, there's a role it has to play. So I know we the banks, I think we get put in the spotlight because of the significance of the banks in the Trinidad and Tobago and Caribbean financial markets. But if you really pull back the lens a little bit, you know, we're not the only player. And it really depends also on the stage. So I think we all are prepared to bank SMEs. We all are prepared to fund and support. But it really depends on what stage on that life cycle this person has reached. And like with any maturity, as they grow up, the governance then falls into place, the financial systems fall into place. And as you get more mature and you reach a certain stage, then it's a lot easier for us to support. And everyone gets happy. But we sometimes forget that there are other players in the capital space that have a role to play as well too.
Right, right.
And beyond that, I think, especially when we're talking about SMEs, and this may come up in this afternoon's panel, I think it's also important to understand that capital or cash or funding is not necessarily it's certainly not the only requirement, and it's probably not even the primary or most significant requirement. It is important, but it's not necessarily the most important one. And so I feel there's this dominating of the conversation around funding and the sourcing of funding that's probably inappropriate. And so I know that a number of colleagues on this panel do have initiatives targeting SMEs and the wider development of SMEs. And some of us are working together to ensure that we build out the SME sector through different programs, including with the stock exchange mentorship, those elements that we need to think about that are additive to the funding conversation. So I just think, like I said, that may be a bridge to this afternoon's, but it's important to make that.
And having said that, so I think the car wash IPO is already out, but...
You sure? Because if I get a prospectus here, Gregory, you think about it?
When we look at the Jamaican example, I mean, the Jamaican exchange is very active.
Yeah.
A lot of transactions, a lot of smaller companies come into market. So I think the Trinidad market could learn a lot from that market in terms of the access to capital and liquidity. And this is not to discount the importance of regulation, reporting, proper requirements to make sure you protect depositors and investors' funds. But at the same time, I think we need a little bit more agility in bringing that mid-market type of family business established for a long time, managing intergenerational wealth, giving them access to capital market within an efficient and timely way to be able to monetize their shareholdings and increase the number of listings locally, because I'm sure the brokers are clamoring for more issues on the market, good ones, regulated, proper format. So I think the takeaway is that as a Trinidad and Tobago market, there's a lot we can learn and a lot more we can do to bring more issues to market.
Sure. So we have a little bit of time left, so I guess, Gregory, if that was that your closing statement, any closing statement from the panelists? Mr. Wendell has come on stage to loop us off.
That was the closing statement.
Is it 3 minutes extra time, or?
So that's where I'm coming in. So the conversation has gone so well that the battery perhaps on Gregory's microphone is reaching the point of
Well, he said the most, so
needing recharge. Well, these things happen. But the discussion has gone so well that this should really have been a major broadcast event for all of Trinidad and Tobago and the region to listen to, based on the banks being able to speak. However, if there is, at minimum, one question in the room, we can use the 2 minutes and 30 seconds that we have in order to accommodate it, lest you don't get to have lunch because everybody wants to have a conversation.
I don't want to be accused of that as
Exactly.
well.
Right, so now you understand the logistics of this, right? It's in the fine print. Is there any question in the room that you perhaps wish to pose based on the subject that we've discussed over the last 30 minutes or so? Yes, the gentleman has his hand up, and we'll get a microphone to you, sir. Fear not.
Hi, my name is Jay Waterman from Block Station, and my question is, what do you guys have in place that you're working on to actually help SMEs in terms of structuring their business to be ready for capital formation?
I guess I can start. So at UTC, we're running 2 programs as we speak. One that's called Youpreneur Plus. If you jump to our website, Youpreneur Plus, that's exactly what it's doing, and it runs you through a program that will help you to think about everything from client acquisition all the way through to how do you account for your business, and to take you towards capital raising. In addition to that, we run a program called Scale Up TT. Scale Up TT launched a week ago, and that's for slightly larger businesses. But those are 2 programs that we're working on as we speak, and so let me.
Likewise, at Answer Bank, with our new digital interface and digital bank, we will be targeting providing financial tools to SMEs in terms of helping them to manage their payroll better, cash management, a little bit of financial literacy as well, and help them with their budgeting and planning. We recognize that the SMEs require a little bit more support in terms of nurturing their businesses and scaling it up, and we want to be able to provide financial solutions to support them going forward.
Yeah, and I'll just add one thing on our end, just one plug. So at the IFC, we will be launching a FinTech Innovation Hub in 2023 with the whole goal of addressing the same questions that the panel sort of addressed, where how do we get the young FinTech companies, how do we get them ready, how do we incubate them, get them access to capital, and provide them with that sort of technical expertise and so forth. So, I will be reaching out to you guys to kind of assist in that, because we really want to establish Trinidad and Tobago. We want to see the innovation coming from the south to the north, because right now that equation is flipped. So that's something on the government end that we will be sort of focusing on.
Yeah. I think we all the time.
Yeah.
So, folks, we've ended on time.
Yeah.
However, there were no lawyers in the room that we know of. There may be persons here who've studied law, but there certainly are media in the room. So maybe when you get back to your offices, just check with legal and let them know what you said here today, so that in case there's any misquoting at any point in time, they will ensure that they defend your right and roles and responsibilities. But certainly the conversation today, thank you very much, John, for moderating and guiding the appetite of the entire conversation, has led to one that creates even more intrigue, excitement, and interest in the whole subject of digital assets. Our panel, ladies and gentlemen. So I'll give you the opportunity to make your way off stage now. Thank you, John. Thank you, Jason. Thank you, Nigel E. Thank you, Gregory. And thank you, Nigel B. as well, for sharing on harnessing the evolution of digital assets and reshaping the future of the capital markets for investors. We're doing well. Ladies and gentlemen, it's time for us now to prepare for lunch. Yeah, that other activity that we have. When we get back here after lunch, of course, there are a couple of other exciting panel discussions and presentations to whet your appetite and to keep you up to date, including, of course, hearing from the region, which is most important in the next segment. But today's luncheon is brought to you with the compliments of PwC. We'll be making our way across to the accommodations on my left, which is your right at present. But once you exit the room, please make your way to Regencies 5 and 6 for lunch. They're actually awaiting you. And we'll be hearing more from Brian Hackett, of course, who will share more from the standpoint of the sponsor for PwC and the subject matter that he has to share with you. So we'll see you in lunch. I'll join you next door in just a short while. Thank you.